All right, Tolga, well, thanks again for joining us for Broker Briefing.
Thanks for having me, Jane, and thanks to everybody for listening and tuning in. It's been, interesting times.
Hasn't it? Now, look, since you were last on Broker Briefing, the markets have generated some great returns with a few key thematics at play, one of them being the resurgence of battery metals, including lithium and graphite. So, look, where do you see the battery metals sector going in the future, and is this something that you're invested in?
Well, I'll give you a bit of a story on how I see that thematic and what's happened in the last sort of 10 years and what probably going to happen from here. I kind of liken it to the tech boom. I don't know for most investors if they were around at this time, but in 99, 2000, the tech boom, every single company that just literally had a website was worth $1 billion. Like the valuation was going through just to have a website. And obviously there was a lot of hype behind anything technology. And as all markets do when you're going by hype, on a thematic that's actually going to be real at some point in time, it crashed. And for about 6 or 7 years, the tech boom basically dissipated. It wasn't there. But all those little companies that emerged from a start from that crash, they turned into major companies that we all talk about, household names now. So I'll give you an example. Same thing's happened with the EV thematic. In 2010, Elon Musk starts Tesla. Everyone gets a little bit excited. There's lots of noise, talk. In 2012, 13, 14, 15, he starts building the gigafactory. All this gigafactory talk, all this demand for these battery metals comes around. You see the price of lithium go up. You see the price of graphite go up. All the other commodities weren't so, focused, but those two commodities specifically. And there was a lot of talk, a lot of hype, a lot of investors around the world that are interested in it. And I mean, from my own experience, I raised $450 million from the world's largest investors to build the plant at Sara in Balama in Mozambique. So there was so much interest and fund managers were so interested in it. And then what happened to the lithium price? Have a look at stocks like PLS, on a couple of dollars, fell all the way down 20 cents. Orocobre, similar story, it was 80% off its highs. Then it sort of goes into this lull period where people go, wait a sec, the demand for the raw materials is not there yet, but the thematic is building. So all the investment is being put in place. And now you look 2021 and probably 6 years later, so 2017 sort of started to crash. 5 years later, 4 or 5 years later, you start to see this trend now where the demand is becoming real, the thematic is falling in place, a little bit like what happened with the tech boom. 2010, 12, 13, Facebook, go through the companies, Google, all these companies, Apple started to emerge with their products that actually were applicable and usable. And you saw this huge generation in tech. You're seeing the same thing play out in the battery metals and EV thematic right now. So Volkswagen, Daimler, all these guys have all retooled their plants to actually build electric vehicles. So you're seeing this massive demand come through. Now, Orocobre, all-time highs, Sara back to $1.50 from 20 cents. Is seeing the thematic actually fall into place now after seeing that lull. So is it exciting? Hell yeah, because this is just the start of it. You're still catching the wave now for investors. So I don't think it's going to pull back anytime soon. What's going to be interesting, though, in my mind, is to understand how oil plays out. I mean, where all these companies saying, all these electric vehicle producers and normal ICE engine producers are now saying we're just going to be purely electric in 2025, 2030, 2035. What actually happens to oil is a bigger question. And how does that sort of negative thematic play out is also going to be interesting to see.
Well, actually, just on electric vehicles, so with copper's importance to electric vehicle production, as well as many other uses, we've also seen some strong growth in the copper price and in the market caps of copper explorers and developers. So do you see further growth for this commodity, and are you confident that investors will still be able to generate strong returns from copper?
I've spent millions of dollars trying to find copper deposits. It's been one of those elusive things in my career. I'm probably going to spend millions of dollars more trying now with the explorers. But you've seen the thematic that's gone up. Copper price almost up 50% over the last couple of years. And I mean, Goldman Sachs, the report I was reading yesterday, they're predicting $5 by year end. So there's still growth there. And the EV thematic just amplifies that, the amount of copper that goes into one of these cars. It's not just that, it's all the infrastructure required for electrification. If you start moving away from petrol stations and gas, you need additional electricity to people's homes and other infrastructure to actually power these things. So I don't see it shorting off the demand going away anytime soon. I do see the supply constraints and issues coming through with the grades dropping off. Places like Chile and Peru and the dramas they're going through politically, which is probably why I'm probably going to spend a lot more money trying to find large copper deposits, and because it's just probably that demand is just not going to go away.
Just a bit of change of pace now. So we know last time we spoke, you were bullish on gold. So although the price has corrected somewhat since then, are you still long gold, and where do you see this going in the future?
Yeah, I'm long to the gills in gold. It's kind of my stable space more than anything else. It's where I look for security for my things. So don't get me wrong, from my perspective, I'm punting all these junior explorers on a drill hole, but when they find something, it's going to be worth money. But I mean, 1800, so 2450, 1800 US, 2450 Aussie for gold is actually still a really good price. Like the Aussie gold producers should all be spitting out serious cash at these levels, and if they're not, then they've got issues. But with all the instability with COVID and negative inflation, negative real yields, and high inflation, it's kind of a place you can't avoid. You need to have some kind of exposure there for most fund managers.
Hello, ladies and gentlemen. Thanks for your time today and the chance to give you an update regarding the Renaissance 2 projects, which were once referred to as the Treasury of Sweden. One copper and one silver project of such high grade and value that they were coveted by multiple Swedish kings and were instrumental in laying the foundation of a very wealthy country. The Gröna copper gold and Sala silver projects had all but been forgotten about in modern times, but the work that we have undertaken during the last year has awoken these giants from their slumber. There's been little to no modern exploration outside of the known deposits in the Greater Falun and Sala projects, exactly the type of exploration that our team has been looking for. Alicanto offers you the unique opportunity for the potential upside with exposure to 2 projects at different phases of the exploration cycle. A completely redefined greenfield opportunity at the historically high-grade producing Greater Falun copper gold project, and an advanced brownfield exploration at the Sala silver mine with historical reported grades up to 7,000 grams per tonne silver. To get started, I'll quickly show the corporate snapshot. We're well funded, having completed a successful raise in late 2020 of $6 million, and we have $4.3 million at the bank at the end of June, with funds expected to come in the door in October from the sale of our Aquirian project, which has been reported previously. Our top 20 shareholders control 49.7% of the company, with board and management controlling 13%. Very grateful for their support. Why Alicanto? There are really 4 things I want you guys to take away from this presentation. We're very fortunate to be right in the centre of a Tier 1 mining location in the Bergslagen in Sweden, with 2 historical projects with a high-grade production profile. We have the Greenfields exploration opportunity at Greater Falun, where we have successfully drilled for high-grade copper and gold during the last year. And for the more impatient investor, we have Brownfields exploration at the Sala silver mine, where we are currently drilling our maiden campaign, and there are assays pending. We have the right team that comes with tremendous recent success. We also have over 1,000 years of geology being turned on its head. In essence, the Bergslagen has been spoilt for having giant ore bodies popping up the surface that have been known about for over 1,000 years. The circumstances meant that there's been really little to no modern exploration outside of these well-known areas. Our efforts so far are proving that there is life in these giants, such as the Falun and Sala ore bodies. We're drilling now, and the upside compared to the downside, in my opinion, is amazing. Quickly on the board of management, as I hinted to you, the majority of the team behind Alicanto needs no introduction. having very experienced and successful explorers such as Ray, Steve, Didier and Mike stand beside me and supporting us as we move forward is a huge advantage to the company. We also have an ace in the pack with our Chief Geologist, Erik Lundström, based up in Sweden, having 6 major discoveries in his own right in the region and now working on his 7th for Alicanto. Many of you will not be aware of Sweden's long mining history. And as far as mining in Sweden goes, there are 3 major mining districts in the country with the large iron ore mines in the upper north, the Skellefteå field in the lower north, and the Bergslagen in the south of Sweden. The Bergslagen is Alicanto's main area of focus at this point, with the Bergslagen being world famous for being one of the most mineralised places on Earth. And I can back this argument up with the massive high-grade VMS skarn-style ore bodies that have been mined in the area over the last 1,000 years. The Garpenberg, Zinkgruvan and Falun and Sala ore bodies are world-class in their metal content and the importance that they have had for Sweden as a nation. But also, having worked in the country for so many years as I have, I've found it to have many similarities with the Australian mining industry, but its key differences being that in standing out as a tier 1 mining jurisdiction is that I already have all the key infrastructures in place. I don't need to worry about educating a pro-mining workforce, building highways, railways, power stations, water access or high-speed communication, as everything is already in place. As a miner, grade is king. And we have some of the most amazing grades in both the Greater Falun and Sala project, which is a great place to start. With our best hit so far in drilling at 9.5% copper, 16 grams per tonne gold, 285 grams per tonne silver and 3.9% lead and 8.2% zinc, just 75 metres from surface at Lustable. And then with the average grade mine at Sala of 1,244 grams per tonne and grades up to 7,000 grams per tonne, these stand out as a beacon as to what can be achieved in the area. We've been very busy over the last 12 months, so much so that we've re-engineered our understanding of the driving force behind the high-grade mineralisation within the Greater Falun project and also applying that knowledge through at Sala. The discovery of copper-gold skarn mineralisation at Wolf Mountain and Lustable earlier last year sent us on a path of discovery where we now have more than 12 copper-gold and polymetallic targets all within 15 kilometres of each other, and also the definition of the stratigraphic sequence of Greater Falun, which allows us to interpret where in the skarn model any outcrop or drill hole is located. This is a massive opportunity for us and an important tool to allow us to vector in on the thicker parts of the system. We're working hard at Falun to further develop our targets, and we have a number of drilling applications in process. Our focus in the last couple of months has definitely been on the Sala project, with 2 drill rigs currently on site testing the extensions to the historical Sala mine, including the unmined Prince lodes. We have sent 2 holes off for assay and hope to have these back in the very near future. With the short time available to me today, I'd just like to give a quick update on Sala. So being only 100 kilometres from Falun and connected by a national highway and railway, Sala is a logical step forward for us. With very similar geology to the Greater Falun project, Sala is a very rich polymetallic silver, lead, zinc dominated skarn. But like Falun, there has been no modern exploration at depth along strike or more than 300 metres outside of the original mine. With the average grade mine at Sala of 1,244 grams per tonne silver, this compares more than favourably with any current silver mine in operation today. If the Sala ore body was unmined and its reserves put up against all of the currently producing silver assets around the world, it would easily make the top 10 on contained metal, but blows everything else away on grade. But it gets better. There are further unmined lodes at Sala, such as the Prince, with historical downhole intersections which appear to be getting wider at depth. And with mining at Sala only down to the 290 metre level, we have strong evidence to suggest that all lodes are still open at depth and along strike. We also have recently discovered evidence to suggest that the stratigraphic sequence containing these deposits at Sala continues to the southwest, with historical silver-lead skarn working to surface in the area. And we know that there has never been any modern-day exploration undertaken in this area, and the opportunity for further lodes to Sala is still very much open. As mentioned, drilling is underway at Sala, and we've sent 2 holes away for assays, and with very promising visuals. The first hole testing the Prince lode is an ambitious 140-metre step out from the known historical parallel intersections of 37.2 metres at 50 grams per tonne silver and 6.2% zinc, separated by a 10-metre pillar to another 6.2% zinc and 15. And as, hang on, I'll start that again. That slide's a mess up. Back to start of slide 8. So drilling is underway at Sala, and we have sent 2 holes away for assays with very promising visuals. The first hole testing the Prince lode is an ambitious 140-metre step out from the known historical parallel intersections of 37.2 metres at 50 grams per tonne silver, 6.2% zinc, and 15.9 metres at 157 grams per tonne silver and 4.2% zinc, separated by about a 10-metre pillar. We've also tested downhole EM for the first time, and we've discovered a strong relationship between the plates and the mineralisation we're seeing in historical and current drilling. This has the potential to be a game changer in guiding future drilling. For the purpose of comparison to the Yaw historically mined at Sala, zooming in on the Sala lode on the left in the diagram above, you see this figure shows 150-metre level at the old Sala mine. As you can see, there were some big stopes up to 20 metres wide and 100 metres long that were mined over many years. The figure on the right shows us part of the core from our first hole into the Prince lode, showing a very similar style of veining as can be seen in the backs of the Sala stopes. The stope and drill core in this photo are approximately 400 metres apart from each other, which suggests that we've got some real size to this project. As you can imagine, the potential for a very large system at Sala is real. Just finishing up, in conclusion, the 4 things I really wanted you to take away from this presentation. As I said, very fortunate to have 2 quality projects in a tier 1 location with historical high-grade production. For the more longer-term investor looking for the copper-gold style mineralisation and potential projects at Greater Falun, but then the more near-term brownfields exploration that we have at the Sala Silver Zinc Lead project, we have all bases covered. We have the right team, very experienced with recent success. As I mentioned, we've turned 1,000 years of geology on its head, and the application of modern exploration techniques for the first time is really starting to pay off. We're very well funded now and at both projects with amazing upside, and we are drilling. So I hope to have some more news in the very near future on those drilling with assays pending, and looking forward to a successful 12 months. Thank you very much. In Sweden, it's a tier 1 mining jurisdiction. So, we're dealing with a highly educated and well-informed public, very much like in Australia. So there is an expectation that all explorers and miners are held to the highest level of compliance. As long as you understand what the rules are and what it is that you are trying to achieve. I've actually found the regulatory environment to be quite good with regards to, especially at our early stage, in allowing us to get up and get drilling. I mean, the most recent example being the drilling applications that we've had through with Sala. I think they were about 4 to 6 weeks from application through to actually being awarded the drilling rights within the area. So I think that compares very favourably even with other tier 1 jurisdictions such as Australia. So, and I think that the world is definitely turning with regards to the Swedish attitude for exploration and building new mines. Sweden is definitely a leader in mining within Europe, has perhaps led its exploration in more recent years. So there's definitely a focus from the government to improve that situation, and we're finding the cooperation with them to be very good.
Great, thanks for having me. My name is Matthew Bowles. I'm the Managing Director of Alto Metals, and we have the Sandstone Gold Project in Western Australia. So I'm going to tell you a little bit about Alto and some of the exciting drilling results we've recently had and what we're planning to do going forward, certainly over the next 6 months. You'll see from the slide on the front here, we're really hitting it hard. We've got 3 rigs currently on site, 2 RC rigs and 1 diamond rig. And that pit there in the back is the Lord Nelson pit, where we've had most of our focus has been over the last sort of 12 months. But I'll talk about that shortly. So just a quick disclaimer there. So sandstone, so we're a West Australian gold explorer. We hold 900 square kilometres of ground in the East Murchison of Western Australia. Covers the entire sandstone greenstone belt. So a major greenstone belt of which we've got a dominant land position over. We're surrounded by a number of multi-million ounce mines and producing mines and gold deposits. Our resource currently sits at 331,000 ounces. That resource is growing. The resources are open. There's a number of high-grade intercepts outside of those resources. So that's really one of the key focuses we're on at the moment. We did some preliminary metallurgical work. We've got some fantastic recoveries up to over 96%. And the project itself has had limited exploration below 100 metres, and I'll talk about that shortly. But that's certainly where we see significant potential, and the reason for that I'll go into as well. As I mentioned, we've currently got 2 RC rigs and 1 diamond rig. We've got over 12,000 assays currently in the labs at the moment. Like most other gold explorers and generally explorers, we're suffering from some of that turnaround in the labs. Our drilling companies are very efficient, but the labs are really getting inundated with the level of activity. But we're starting to get through that. So you hopefully should see some results coming through over the next few months, given the level of drilling activity we've got. We're well funded. At the end of the June quarter, we had 5.1 in cash. And we do have some ongoing corporate interest, and I'll talk about that. It's one of the things that has been hamstring us for probably for the last sort of 18 months, but we've got through that now and are really hitting it hard. So just before I go on, I do want to talk about some of our, which I think are some really exciting results we've had recently from our Lords Nelson and Lords corridor that we've our focus of exploration is on. You'll see that image down at the bottom of the screen there that's looking south, and there's the Lord Nelson pit at the bottom left hand of the screen. And if you look at the top right, that lighter area there, you can see this on with my cursor hand, but that's the Lord Henry pit. So both those pits produced, Lord Nelson produced over 200,000 ounces at 4.5 grams per tonne. It's only mined down to 90 metres, and they stopped mining once they hit that fresh rock. Similar to Lord Henry, only mined down to a maximum depth of 40 metres, and then as soon as they hit the fresh, they stopped mining, and that was predominantly because the mill that was in the area could not process the fresh rock. And that's where we see the key potential here. So we've started drilling below those pits, and you can see some of those results that we've had a pretty spectacular 134 metres of 1.9 grams per tonne from 24, including a really high-grade zone of 20 at 5.9. So really, really encouraging results there from a new lode, which is called Orion, which is just the south of the pit. And then Lord Henry as well, sort of 4 metres at 16. So it's a very, very high grade and quite shallow. So the other thing is we started drilling along the corridor, so between this 3 kilometre corridor, which in its early stage at the moment, we're getting some encouraging results from that, but the focus for us is certainly on chasing the plunge of Lord Nelson and Lord Henry. And then one of the other prospects, which is our regional prospect, which is only about 5 kilometres to the west of the Lord's corridor, is Vanguard. That's the first time we've seen visible gold in the system, sort of 4 metres at 60 grams from 40. So that's a really, really high grade intercept and quite exciting for us. And so that's currently being followed up with one of the RC rigs that's on site. So very quickly on the corporate structure, so 450 million shares on issue. Our share price is sitting at about 9 cents, so market cap's about 41, with 5 in cash. So EV's fairly generous, about 36 million. The share price, you'll see from that chart there was a big spike, and that's partly where we had one of our first takeover bids. We're trading about 3.5 cents at the time. We've had about 3 takeover offers over the last 18 months. That really has hamstrung the company. And so we've missed out on a lot of that uplift that a lot of our gold peers have enjoyed. And that kind of in some ways demonstrates the very tight capital structure that we have with the top 20 holding over almost 70% of the register. My fellow director, Terry Wheeler, is the largest shareholder with just 19%. Westgold recently joined the register with 14%. And then GS Group, which was a legacy from one of the takeover bids. So a lot of corporate activity in the area. I think they're recognising the potential that's there, and now that with so many rigs on site, we're starting to unlock that real value. So this slide just highlights where we're located. As I said, 900 square kilometres. It's right over the sandstone greenstone belt in the East Murchison of WA. You can see we're surrounded by a number of multi-million ounce mines and deposits. Goldfields, Agnew, Lawlers camp out to the east of us, and then to the west there's Ramilius is Mount Magnet, and then West Gold's Tuckabianna and Meekatharra operations. So there's a number of very large deposits, number of mills. We're clearly in a key strategic. Sorry, I'll start that one again. So as you can see here, we're located in a world-class gold address, surrounded by a number of multi-million ounce mines and deposits, and strategically we're located right in the middle in that area. And you can see by the blue that covers 900 square kilometres of that sandstone greenstone belt. So it's a really exciting spot to be in. A number of operational options for us, but the focus for us right now is on growing our current resource. So this is just a zoom in on the sandstone belt itself. We're calling it underexplored because it really hasn't had that level of exploration that a number of other properties have. A lot of that was to do with an oxide mill that was in the area at the time. That oxide mill really just drove a lot of the exploration. So previous companies were just chasing very near surface oxide material to put through that plant, and obviously a very different gold price environment. So we're going back in, we're looking at it in a different aspect. We've prioritised a number of prospects. We're looking down, focusing on what we're calling the Alpha domain in the southeast area there. And those red dots highlights where our current resource sits at 300,000 ounces. And most of those resources have a current mining licences on them, so they're all ready to go as we continue to grow our resources. So this is one of my favourite slides, probably the whole deck. It really sort of highlights the entire potential of the property. The image there on the left shows all the drilling that's been done over the property historically, and then the same image there on the right is all the drilling that's been done, which is 100 metres or deeper. So you can really see that drilling today just has not scratched the surface of this entire 900 square kilometres of greenstone. So for us, that's where we see the real excitement. Most of the previous exploration was focused on near surface oxide material. We're looking a little bit deeper than that. We're drilling a little bit deeper and we're finding a lot more gold. And that's sort of just demonstrating that the exploration strategy and model that we have is working. You can see there by that image on the left, there's multiple prospects. And for us, it's just a challenge has been to rank them and to stay focused. And where our focus is, as I mentioned, is on the Alpha domain, predominantly on the Lords corridor, which is just down here in the southeast, and then coming back into that Alpha domain as well. So I mentioned the Lords. So it's a large granodiorite intrusion. It's 3 kilometres just over 3 kilometres in length. It hosts 2 shallow historic oxide deposits, which is the Lord Nelson deposit and then Lord Henry. We've been drilling below the pits at both Lord Nelson and Lord Henry, and then along strike, and we're finding a lot more gold. Some of the greatest results we've had from down plunge of Lord Nelson below the pit, 16 metres at 5 from 240, and that's in primary, so in fresh rock, and that's fantastic on underground material for us, underground grade. Sorry. You'll see that we've also started to test along the corridor itself in that central zone. For us, it's certainly highlighting that there's certainly a lot more gold, anomalous gold in that area, and that's sort of it's something to follow up. But for us, the priority at the moment is certainly on both Lord Nelson and Lord Henry. So looking at looking at Lord Nelson in a long section here. The dashed line highlights the top of fresh rock or the bottom of the oxide. You can see that pit where it was just mined down to the top of fresh rock. The red dashed line highlights the lower resource mineral boundary. And what that means is anything else below that line is outside the current resource. So the current resource at Lord Nelson alone sits at 109,000 ounces, so less than 200 metres. And you can see here this in the sort of blue is the new Orion lode, which we discovered 18 months ago. The discovery hole on that was 29 metres at 3.5 from about 29 metres from surface. So that's really opened up that entire corridor to the south. And you can clearly see there with further drilling, we expect to see that pit get pushed to the south. And then ideally sort of we can have a much larger open pit there. Certainly early days for that. And we're working on it, getting a resource up, but there's certainly what we see as a significant potential there. And then the other part is we're testing this down plunge extension here where we have the 16 at 5 and the 17 at 3. There's just been no drilling here, and that's just completely open. So that to us presents the key excitement and for certainly for the Lord Nelson deposit. And these orogenic gold systems can get a lot deeper. So I've spoken quite a bit about the Lords, but I do want you to understand in quite a short period that Alto is a lot more than just a couple of Lords. Just within the broader Alpha Domain area, this slide shows where all of our current resources, so the total 330,000 ounces is hosted. A lot of that's within a much larger 20-kilometre corridor, which hosts Vanguard and then our Indomitable camp. Now, both Vanguard and Indomitable, they're both unmined. There's an oxide component from surface. Indomitable's weathered down to about sort of over 190 metres of oxide, so that's really exciting. That's something that we're looking at come in the coming months. But our focus has been on Vanguard, other than the Lord's corridor. So that's certainly something that we're sort of chasing pretty aggressively. And you can see there from some of those results, it's quite hard to ignore Vanguard and Indomitable with some of the grades that are coming through there. So very exciting for us, lots of activity and lots of news flow coming through over the coming months. And that leads me on to this slide, which I guess we have been drilling since the beginning of the year. We've had one rig on site, then we added a second RC rig to that. We've just now brought on a diamond rig. So we've got a diamond rig drilling at, it's completed drilling at Lord Nelson, it's drilling at Lord Henry, then we'll be moving to the Vanguard and then Indomitable. And then we have two RC rigs which have completed a 30,000 metre program, and now that's expanded into a rolling 10,000 metre program. So we're just really hitting this hard, and that's all culminating in some great exploration results coming out, and then sort of working towards a much larger resource, which we'd hope to have out, I would say, sort of end of Q4, early Q1 next year. So that's really just the summary, and it's really just scratching the surface of the potential we have at Alto. But why would you invest? We've got 5.1 million in cash. We're really aggressively exploring this property now. We've had some corporate interest, or ongoing corporate interest over the last 18 months. I think there's a number of groups that can clearly see the potential of the property, and for us, that's why we're aggressively exploring this. We want to demonstrate to shareholders what we actually have here, which we're really excited about, because it hasn't had that level of exploration that so many other properties have had. The resource, as I said, is 331,000 ounces. That is growing. It's a major ground position. It's a dominant ground position in a well-endowed gold district. And the drilling below 100 metres is just very, very limited. So that's where we see that significant upside. And as you may be aware, these Aquirian gold systems can go much, much deeper than that. And for us, there's multiple prospects that we haven't even started to, but it's really for us just to systematically explore what we have and then start to work through some of those other prospects.
Here today to provide you with an update of Eagle Mountain Mining, and in particular our Oracle Ridge project in Arizona, where we've had some really good exploration success, and we're accelerating our exploration activities quite a lot at the moment. So I'll just dive straight into it and our disclaimers. So many of you will be familiar with our company and the project. So some of the recent news, we've been accelerating our exploration activities. We brought on a second drill in May. We've now just brought on our third drill at the start of July. We're starting to really see the meters build up and the assays. We've got 11 holes in the labs at the moment, so plenty of news flow still through to come in. We've recently appointed a skarn expert, one of the world skarn experts, to help us really understand the potential of Oracle Ridge and that surrounding district. And he's been looking at our core, looking at a lot of our other information coming in, and concluded that there is good prospectivity for further mineralisation, which is really giving us that confidence that it's worthwhile doing this expanded, accelerated exploration program. We've also gone up to 100% ownership of the company. We were at 80%. And as I said, we've had some really good exploration results that just keep on coming in. So we've got, for those of you who don't know us too much, we've got a JORC resource, 12 million tonnes, going 1.5% copper with some really strong gold and silver credits in there as well. We've got some great credibility to become a low emission mine by the use of gravity, and I'll explain that a bit later on. This project, it's an existing mine. It was mined back in the mid-90s. There's 18 kilometres of existing underground development going in on the side of the hill, and it's in really, really good condition. So that's a real good benefit for a restart of the mine. We're in Arizona. It's a tier 1 jurisdiction with a lot of the local mining support services that you'd expect. We've been drilling since September. We've still got $9 million in the bank. We've reported in the last quarter, at the end of June, and really got a great board. Charlie Bass is our managing director, very well known in the mining industry with a really solid track record of finding and developing big projects. So we're just located near Tucson. It's a very mining-friendly jurisdiction and a mining-friendly town and district. I'm going to start this slide again. So we're located near Tucson in the southern part of Arizona. You can see there's a lot of the big major mines and major players around us, and that's because you get these big projects. You get these big, large systems in Arizona which get mined for decades in huge, huge tonnes. Now, what we think is potentially we're just at the tip of the iceberg with that. We've got a skarn near the surface, which is very similar to a lot of the other big major projects around us, and that's what's really getting us excited, is that scale potential. There's 3 smelters in the district. There's road, there's rail, all the aspects, an international airport for a tier 1 jurisdiction. So the work to try and understand that scale potential, we're doing multiple layers of geological studies to help us vector towards where this mineralisation has come from, the source of it, and therefore define our drilling targets. It's working really well. We're getting great results from the vast majority of our drilling outside the existing resources is hitting mineralisation above our cutoff. So it's showing that these geological studies are really working for that pipeline. So in terms of that, where we've come from, we bought the project in 2019. We had 80% of it at the time. We started off a lot of these studies. We started drilling in September and haven't stopped. We're ramping up the drilling with our 3rd rig, and we're looking to go to 5 rigs by the end of the year still. We brought on a CEO in the US. His name is Manuel Ramos, who was the former president of ASARCO, which is one of the big copper producers in Arizona. So he's the CEO in the US and really driving us forward with a whole lot of the contacts, knowledge and experience of someone who's worked in these sorts of roles before. So I'm thrilled to have him on board. We're really getting a great team behind us. So in terms of some of the results, this is a plan view of our project area. So on the left-hand side here, you can see in the yellow, that's our existing resources. And with some of those results that you can see down the side there have been fantastic. And they're all outside the existing resource. Some of the grades have been up to 34%, and typically it's been up to about 12 metres in thicknesses. So good mining sizes. And when we started off looking here, we think this is a bigger system than what's currently been defined. So we're stepping out that drilling, but then we've also picked up a whole lot of other ground around us. We've more than doubled our land holding. Now, what you can see from some of these other areas, we've mapped an outcrop of copper mineralisation with some extraordinary grades, which was outcropping over about 4 kilometres. So between 6 to 10% copper. Our interpretation of that is potentially it's a zone which is dipping back underneath Oracle Ridge for up to about 3 kilometres. So potentially quite a large area and quite prospective. So this is a section going through the project. We've currently been drilling up in these resource areas to the top, expanding that area, but we're doing a lot of work to define the structures. This hasn't been done before, quite remarkably, at Oracle Ridge. So the structures of what defines the plumbing system for this style of mineralisation. So you can find out possibly where it's come from. In doing that as well, we've also identified this other target called ORX, Oracle Ridge Extension. You can see over onto your right-hand side, which is also prospective for further high-grade mineralisation that we've been seeing at the main resource area, but potentially on a much larger scale. So you can also see here, this is where the existing development comes in on the side of the hill. Certainly that helps for a low emission mining operation by being able to use gravity. This is a section through the main part of the existing resources. You can see that it's a series of stacked lodes. Now, this is really valuable. It's important because it means the potential to be able to open up multiple mining fronts for a future mining operation. So it means that some of these holes that we're getting are also getting multiple hits along those holes. So we're currently going to do some infill holes in this area, in some of those areas which are currently in the indicated status to get them upgraded to measured. So for areas which we mined early on in the mine life. So I've got a few photos here. It's located on top of a hill. Some of these areas which we've been drilling now literally haven't been drilled because of some of the access challenges so far. So we've spent a lot of effort trying to get new roads into some of these areas so they can be drilled, arguably for the first time, and we're getting some good results. We've only just finished off some of these roads, so we're really now just starting to potentially see the fruits of this accelerated exploration program. Here's another rig. This is drilling a bit further down the hill, targeting some gold and copper mineralisation down dip of some other existing known outcrops. Our great geos, we're building up the team. We've got over 20 people, employees at the moment, plus contractors on top of that. It's what you need to do to try and build up that scale of your drilling rigs and make sure you've got that right support there. So you've got your geologists thinking about not just about drilling holes, but it's about developing that pipeline, understanding what it really means. Here's some outcropping copper mineralisation at Oryx. We're developing this side of that and understanding what's that potential there as we speak, but having outcropping mineralisation is quite exciting. As I mentioned, we've got underground development. Now this goes in, it's in limestone, so it's preserved quite well considering that this is over 25 years old now. You can see some photos. This photo was taken just last year, so in great condition. This is Brian Paul, our principal geologist, holding a piece of massive chalcopyrite that went 34% copper, 367 gram per tonne silver, 26 gram per tonne gold. So some phenomenal grades there. And we're coming across that was one of the best intercepts that the mine has ever had. And the question is, well, where's it come from? It just needs more follow-up work. But we're actually had challenges trying to do that because of access with roads. So we've now got those roads in and we're really now just starting to drill some of these areas in a zone called the Talon for the very first time. So we're really excited by what that potential could be. Our strategy going forward is to expand the resource. We've got to understand what we're sitting on, resource growth, step out drilling of the existing resource, upgrade the existing resource. We don't want a whole resource which is in the inferred status. We've got to get that up to indicated and a portion of that up to measured as well. But continuously, we want to keep on targeting those other near mine targets, which would be complete game changers as we understand that broader potential. I mentioned at the start our potential to become a low emission producer. Now, we're really excited by this because not only we need copper, for solar panels and the green energy, but if we can produce it in an energy efficient way, that would be a really exciting story and certainly something worthy of pursuing. Now, because we're located on the top of the hill, we can use gravity to help reduce the amount of energy to mine initially, reduce the amount of energy to ventilate the mine as well, because we can use battery and electric equipment, which doesn't need as much ventilation. Power is one of the big consumers of energy and cost in a mine, and also, depending on how that power is produced, emissions as well. We've got smelters in the state, so less transport requirements as well, and then possibly being able to locate a concentrator further down the hill as well. There was an existing concentrator on the site. That's gone now. However, it did produce a nice clean concentrate. We would hopefully be able to be a future mining operation to be a lot larger than what was mined back in the day, which was around about the 250 to 300,000 tonnes per annum. We would hopefully be doing a lot higher throughput than that to be able to get our unit costs down. So corporately, still quite tightly held. Shares on issue just over 200 million. The share price around about the 80 cents. We've got a market cap of about $170 million. We do have some debt that you can see there, which is largely the repayment in 3 years' time of the to the acquisition price for the project. The board, employees and management still hold about 30%, just over 30% of the company. So well incentivised. We want to make sure this is going to work. We've got some good institutions on the register, holding about 30%, and the balance is some high net worth and some retail. So Charlie Bass said, look, we strongly believe there is really good potential, not to make just a good mine, but a great operation. This is our focus for us, unlocking that potential to turn that into reality. I really thank our existing shareholders, potential future shareholders who are joining us on this journey to become a low-cost copper producer in Arizona. Thanks very much. Yeah, so over the next few months, look, I'll start off. It's been a bit frustrating, probably in the last month or two. We've had some unseasonal rains. You get monsoons in Arizona, so that has led to some lightning delays, and the rigs have gone a little bit slower. And then also on top of that, we've had some delays at the assay labs cutting our own core. Now, a few months ago, we've gone and purchased our own core saw so we can expedite that process. The actual assay time isn't taking too long, so that's quite good. But we've now got 11 holes in the lab. Previously, it was only about 1 or 2 or 3 at a time. So we're really starting to see that that potential slug of news flow and results coming in. But as we come out of that monsoon and we really hit our strides with the drilling, that is really going to be quite exciting. And then on top of that, bringing on the 4th and that 5th rig, there should be plenty of news flow for investors, and that's going to be our key focus, is going to be exploration results leading into future resource upgrades, subject to the timing of those results.
So, Charlie, you've had many successes in the past. I mean, firstly, you had Eagle Mining Corporation with the discovery of the Namari gold mine before the company was subject to a hostile takeover in 1997. And then, of course, Aquila Resources in 2000 before it too was subject to a hostile $1.4 billion takeover. So tell me, what is it that you look for in a project?
Well, sorry, Jane. The takeover, Aquila was formed in 2000. The takeover was in 10. Sorry, just a minor correction there. Look, there's a long base to for the projects I looked at. You've heard of doing your 10,000 hours. I did more than that, predominantly consulting for many companies, large and small, on a lot of different projects. And so I saw what good projects are, what bad projects are, how good people operate, how not so good people operate. And so I guess when it was my turn, I look and still do look for things that other people aren't looking for. So the old adage, the bigger the problem, the bigger the opportunity. You know, anybody can do easy. But I guess with a skill set and with surrounding yourself with good people, you'll look for more difficult projects. Definitely not in difficult areas of the world, politically speaking, but maybe where people aren't looking, maybe commodities that aren't flavor of the month. So you know what's out there. With the first Eagle, I had an opportunity. I was told by my best friend back then, well, still my best friend, that the northern end of the Yandell belt, he was working for Chevron, he said, if you can ever get your hands on it, you want to go for it. So an opportunity came up that big companies couldn't take advantage of. Little companies didn't have the proverbials. And I just went out on a limb to do this deal. And what Nimri was, we were told not even to go and don't waste our time going in that area. You go there and you have a look on the ground instead of looking at computers, and turn the rig around, and we never stopped. With Aquila, for example, you know, we started Aquila in gold. We transitioned probably before people were even talking about China. into iron ore and coking coal. And it was pretty easy then, especially with coking coal and Bowen Basin. They're the big guys with their mines and coal dibs. And we just went right next door to them, staked all the ground. And next thing you know, we got coal mines. Oh, fancy that. With iron ore, the same thing. The big guys, they're there for many, many, many years. They didn't start with these big mines. They started maybe 10, 20, 30 million ton a year. Well, where can we put those kind of things together? The Arizona projects, so hard. Nobody wanted to know about them. They said, you'll never, it's too hard, too hard, too hard. Well, at the end of the day, they're not really that hard. They're just not simple.
Well, perfect. You actually kind of touched on it just then, but so you talked about the project. Now, can you tell me how important it is for you to build the right team when you're building out a strategy in a company?
Jane, team is everything. Nobody can do it themselves. When I first started out, it was with Tony Pulley, who had been my longtime accountant. I knew resources and he knew financials. And because we've been dealing with each other for many years, there were no hassle. We knew how each other operated and still do. And you got on. When it came time to building the bigger team with geologists and engineers and things, I had the opportunities to meet with and work with a lot of good people. So they were hand selected. You try to put together an A team, or put together A teams, because A teams can take a B project and make it work. You take a B team with an A project, they could destroy it or not get the max value out of it. So to me, teams, everything.
And look, so some might say that you've been lucky in the mining industry. However, it might come more down to you creating your own luck with risk, preparation, and opportunities. Can you just tell us a little bit more about how you've done this?
I really don't like it when people call me lucky. I can go to the casino and lose every cent. That's luck. My luck or good fortune is in the people that I meet and I surround myself with. And it's those people who make my luck. It's as simple as that.
And look, now, of course, we know you're the managing director and major shareholder of Eagle Mountain Mining. Can you tell us a little bit more about EM2 and the company's Oracle Ridge Copper Project?
Okay, well, we've been operating on my own bat. I picked up this very difficult project north of where Oracle Ridge is in Arizona, and we've been working that. And we thought, well, we're here in Arizona. I like it. I worked in the very early 80s at Twin Buttes, a big porphyry project there south of Tucson. And we saw this project. It had been put into administration. And I had a look at it and I thought, well, I think there's more than meets the eye with Oracle Ridge. It is a skarn deposit, which means you've got mineralization within what was limestone. And that limestone gets cooked up by a porphyry. So almost all the major mines in Arizona that are typically called porphyry actually start as skarn deposits. And they're big. They're big systems. It's not one big ore body, but it's a lot of bits and pieces put together. You've got to understand that Cadia is actually it's a skarn deposit, but it's so big now, there's an associated porphyry with it. And so if you just have the blinkers on and you focus, and this is the problem that people before had, focused on what's immediately in front of you, all you see is this very good grade copper, a bit of gold, some silver, and that's what it is. But there's more to that. And these skarn deposits typically extend for multiples of kilometers. And there's almost always a porphyry or some intrusion that has cooked up the limestone and brought the fluids in. So this excited me. When this opportunity came up, with Oracle Ridge. I thought, oh, this is really, really good. And again, negotiated the deal with this private equity company, Vincier, as part of Atlas Holdings. We got on very well, shared values and things. And next thing you know, we're operating this project. And as we look and as we understand it, as we get our eyes in, it's getting bigger and bigger and bigger. But we're not just looking at what was there as the traditional underground mine. We know that you just know that there is more in the area. And that's why we're broadening it out from just looking at what is there in front of you, but what's 3 kilometers, 5 kilometers away, 10. That's how big these systems are. So we haven't yet found the porphyry, but the skarns are where you make your money from in the early days. And then you get the life, the long-term life, usually when you find the porphyries in bigger systems.
Perfect. And look, environmental, social and governance is becoming increasingly important in today's mining industry. Can you tell us how you're applying ESG at Eagle Mountain's Oracle Ridge Copper Project?
The way that the physical situation and where Oracle Ridge is, it makes working with ESG so very simple. We're currently carrying out environmental and cultural surveys in the area. We don't believe that we have any cultural problems such as that occurring up at Resolution. Environmentally, we don't see a lot. If there are sensitive areas, we'll stay away from them. The way the Oracle Ridge existing ore body sits, it's in a mountain on a mountain side, and you climb up the mountain and you go in through portals up the side of the mountain. These are relatively, if you can imagine, coming from limestones. Of course, they've been faulted and folded, but predominantly they're flat and they're layered. So you go in and off the side of the mountain in portals, and you climb slightly uphill, unloaded. You come down loaded. Electric vehicles are the way to go. You go electric vehicles, you have your development costs are going to be lower because you've got narrower passageways. You don't have ventilation in an underground mine is at least 30% of your operating costs. If you're running electric and not diesel, you don't have the ventilation problems. You're also not putting out carbon. So as the trucks run uphill, unlike in a big open pit, they go uphill loaded. We go unloaded uphill. We're not a mine with a shaft that you're cranking things up against gravity. Gravity's our friend. So we get out of the mine, the ore gets dumped on a conveyor belt. The conveyor belt goes downhill, loaded, generates power. Arizona, you wouldn't know it over the last few weeks because the monsoon season started early, so it's slowing us up a little bit with our drilling. But generally, you've got about 350 days a year sunshine in Arizona. So putting in solar farms there is a no-brainer. So everything that we're doing, the way the physical layout of the operation is, gives us low energy costs, electrification. It's a relatively short haul to a rail and relatively short distance from rail up to smelters. So we're not spending, there's not a lot of pollution or high costs in moving your concentrate or whatever to basically the end user. Also, there's one other bit with respect to the ore having been more or less limestone, even though there are sulfides in it. When this goes out into tailings dam, the limestone neutralizes the acids. So you're not leaching out the sulfides and creating an acid environment. So the nature of the beast has given us, this is the easy run, has given us very easy ESG. I would hope that when Oracle Ridge gets into production, it could be one of the lowest carbon emission mining projects anywhere.
Brilliant. And just, we've only got time for one more, so one's back to you. So being highly motivated, what is it that drives you?
There are a few things. I love solving problems. And of course, the harder the problem, the greater the opportunity. I love building effective teams, which we've talked about. And I like creating real value for all stakeholders. Just simple.
Brilliant. Well, Charlie, look, thank you for joining me today, and I'm looking forward to seeing more from Eagle Mountain in the near future.
Thanks, Jane. Much appreciated.
Thanks for having us. Matt Friedman here from Dynamic Drill and Blast. Appreciate the opportunity to be able to talk to you. This is an investor update from July 2021, and it talks to Dynamic Drill and Blast and what we've been up to. Some of the key points of the presentation. We've recently completed an acquisition of Orlando Drilling back on the 14th of July, and we're thrilled to have the team on board. Orlando is expected to deliver significant earnings for Dynamic Drill and Blast, to take group revenue around the $58 million mark and contribute around $12 million of EBITDA for the financial year 21 period. The transaction also brings in an additional 17 drill rigs to the group, giving us around a 50-50 split of grade control and blast hole drills. So we're thrilled with Orlando being on board. We've got a really solid and complementary portfolio of tier one customers, including end users such as Rio Tinto, Northern Star, Anglo Gold, Galaxy, and others. So we're really thrilled with the customer composition we've got. We've got a strong balance sheet position with a net asset position of around $39 million, with access to cash and undrawn finance facilities in excess of $20 million. So plenty of funding for growth. We see significant opportunities to be able to cross-pollinate opportunities between the business units, and we're seeing that already in the last couple of weeks since the transaction completed. Orlando provides services within the grade control and resource definition space, and then Dynamic Drill and Blast are providing the production and civil construction activity. So we're seeing engagement at a very early stage with project owners right through to production. We've also increased our geographical presence. In addition to the yards we have in Perth for Orlando and Dynamic, we've also secured a yard in Kalgoorlie within the goldfields to support our regions out in that region, as well as in Tom Price to support Pilbara projects. As discussed on the previous slide, Orlando is expected to generate significant revenue from the group, and the unaudited figures are very strong. The earnings are very accretive to Dynamic Drill and Blast, to the holding co, and we are thrilled to have Joel Skipworth and David Kinnersley join the board also. The guys have been around in the business for the previous 10 years, and we're really excited by particularly the asset management capability that they're bringing to the group. Founded in 2007, Orlando is a West Australian-based and focused grade control exploration, resource definition drilling business with a fantastic blue chip client base, prominent in the Pilbara and the Goldfields region of Western Australia. They've got AEST, RC and dumb drill rigs, and are very well positioned for growth. The revenue split by commodity is quite heavily focused on gold at the moment, and around 60% of the work undertaken by Orlando is focused on the resource definition, exploration components of drilling. The customer diversification that is brought along complements Dynamic's existing portfolio, and we see a lot of opportunity to be able to leverage off that. The rationale behind the deal was very clear. We have been thrilled not only by the cross-selling opportunities that we've seen in a very short period of time, but there are also some cost opportunities resulting from synergies such as shared overheads, shared services, asset management, as well as the optimisation of plant and movements around the state. We're absolutely intending on keeping the brand equity that Orlando has built. We've got a fantastic reputation with a great team, and we'll be keeping that in place. The transaction has really transformed Dynamic scale. As mentioned previously, group revenue is going to be between sort of $56 and $58.5 million, with EBITDA for financial year 21 looking to be around $12 to $12.6 million, which is a really great result. We can just see over the last period, for a comparison on FY20 to 21, the step change that the transaction brings along. These are some of the pro forma numbers: market capitalisation, group revenue, EBITDA, and our net asset position, putting us in a very strong position. As discussed earlier, the integration strategy is to absolutely leave the Orlando brand alone. It's a fantastic brand, and they've built up a very strong relationship with Tier 1 operators over an extended period of time. The composition of the board is made up of Garrett Dixon, non-executive chair, who's a very experienced chairman and sits on a number of other ASX boards. We've got Mark Davis, managing director, founding managing director of Bannerman Drill and Blast. We've got myself, we've got George Garnett, who's a non-executive director with a corporate finance background, and we've got the inclusion of David Kinnersley and Joel Skipworth from Orlando. Future growth and how we're looking to achieve that. First and foremost, we'll be focusing on our organic growth opportunities. We'll be continuing to strengthen our relationship with our existing debt providers, being Commonwealth for the Dynamic Drill and Blast business and National Australia Bank for Orlando. We're looking to grow into our overheads. We're generating very good margins, and we think there's some further improvement to come through the improvement of utilisation as well as sharing some of the shared services. We have the scale to be able to grow into the structure that we've got supporting the businesses. In terms of fleet, we'll continue to try to source fleet and drills in particular in an efficient manner. The market's quite tight. It's getting more and more difficult to source drill rigs, and the lead times are extending. We do have a good network in the grey iron space, demonstrated recently by a couple of acquisitions. We're able to bring some top hammer drill rigs in from North America, in a very efficient timing, in a very efficient time frame. So we still look at those opportunities, and we use the relationships with the OEMs we've got, particularly Epiroc for the drill and blast business, and the Orlando guys have been able to source another new tram drill rig recently as well. In terms of explosive equipment, we constantly look at ways to be able to minimise leakage through the businesses. An example of this was the acquisition of a MMU truck, which we were able to pick up recently, and we'll be deploying that into one of our drill and blast projects to reduce rental leakage. People, which is a bit of another tight point at the moment. Dynamic has a attraction retention program that focuses on not only bringing in skilled labour to be able to perform the roles that are required and retain those people, but we've also got traineeships being rolled out to bring the next skilled generation of drillers and shot firers and support staff through. And we're also continuing to look at M&A opportunities when they make sense for the business. This slide just talks to some of our major clients. And the end client base includes Northern Star, Sandfire, Anglo Gold, First Quantum, Galaxy, Gold Road, Rio Tinto, Atlas Iron, and Strike Resources, who we are currently just finalising contract terms on for the Paulsons East iron ore project. In terms of operations, Dynamic continue to provide services on Galaxy Resources, Mount Catlin spodumene project, lithium job in Ravensthorpe. That's a fantastic job, and Galaxy are going from strength to strength. So we've been there for 2 contract terms, and we're really enjoying our time working with Galaxy. We're also commencing work on Rio Tinto's Brockman 4 White Quartz Road project during July. And we continue to service Anglo Gold's project, as well as Adam Resources' Kirkalocka project in the goldfields. We provide a number of other services to other companies around Western Australia, and we've been able to secure a new T45 blast hole drill rig from Epiroc, which has been fantastic, and that helps us with cycling of assets and making sure our planned maintenance is able to be undertaken without interruption to our customers. We've also expanded, as previously mentioned, our geographical presence to be able to support our regional projects, probably in the Pilbara and the Goldfields regions. Operational update on Orlando drilling. All types of drilling are taking place at Gold Roads. Also down at First Quantum's Ravensthorpe Nickel project. RC drilling taking place at Northern Stars projects, as well as Sandfires. Orlando have been able to secure a SRAM RC drill rig with a lead time, which we'll be expecting delivery towards the back end of the year. Orlando also secured a D65 RC grade control drill rig from Epiroc Australia also. Just a bit around the market profile of Dynamic. Tickers DDB. There's 114 million odd shares on issue, and at a share price of around 46.5 cents, market capitalisation is sitting around 51 million. It's the balance sheet information here, with a net asset position around $39.4 million. We're really pleased with the position of the balance sheet to be able to make sure we can capitalise on future growth opportunities. And that's the presentation.
Hi everybody, thanks for having us here at this presentation. This is the first presentation for Cooper Metals, an Australian-based copper gold explorer planning to list on the ASX in October this year. Now we have 3 exciting projects to talk about today, and we'll get right into it. There's a disclaimer, of course, that you can read when you download the presentation from our website. So what's the investment opportunity for Cooper Metals? Cooper Metals has a strong copper and gold focus in Queensland and WA over 3 projects. Now, with the copper price reaching 10 years highs and strong fundamentals driven by the electrical vehicle market, it is a really good place to be. It's a great commodity, and so is gold. So our 3 projects, our flagship project is at Mount Isa East. It has multiple copper gold targets from early stage to near drill ready. Our Yamana gold project in WA is just a long strike from the Grueware, world-class Grueware gold deposit at the Yamana Greenstone Belt. The Guru Gold project is only 20 kilometres from the Deflector copper and gold deposit in WA in the Murchison region. We'll have significant news flow planned for when the IPO starts. The IPO intends to raise $5 million at 20 cents, 40 million shares at 20 cents, which is 66% cash backing. We'll have a tight capital structure with a low EV, which means we'll be well leveraged to exploration success. We've got a very strong team with a track record of discovery and also of development. So just getting into the project summary. Now, it's taken about 6 months to compile these projects. We really had 3 main criteria when we were looking for projects. Criteria 1 was something that complemented the team's skill set, copper gold, domestic exploration in Australia. Number 2 was strong prospectivity, so known mineralised terrains, underexplored tenement packages. And number 3 was something that really had high value, so something that we could acquire at a fairly low vendor rate so that shareholders were leveraged to success. So going through the 3 projects, the flagship Mount Isa East Copper Gold project is in a world-class Mount Isa Inlier. We've got a very large tenement package there, 1,300 square kilometres. It's prospective for iron oxide copper gold and shear hosted copper gold deposits. Moving over to WA, our Yamana Gold Project, as I said, is a long strike from the world-class Grueware gold deposit, which is over 6 million ounces of gold. And lastly, the Guru Gold Project in WA in the Murchison region is in a Gulliwa greenstone belt, not far from Deflector copper gold deposit. We've got 26 kilometres of greenstone belt there to explore that's never been touched. The board of directors, it's a small board. We've got 3 people. Michael Frayne, our chairman, is a geologist and a qualified accountant with over 30 years experience in the resources industry, in the financial markets and in resource companies. Tim Armstrong, which I've worked with, I should say, for a few years, is in the financial markets. He's well plugged into the capital markets in Sydney and WA. And myself, a geologist with around 30 years experience in international and domestic exploration in a range of commodities. One of the highlights of my career has been Joint Explorer of the Year for mineral sands deposits in South Australia. And those deposits are being mined today and will be for a long time. So in the last 10 years, I've worked in the junior sector. I've worked for companies like Musgrave Minerals and Marmota, and more recently with 27 Co, where I worked with Tim Armstrong. When the opportunity came up to start a new company with a copper gold focus, working with Tim and Michael, I jumped at the opportunity. So our indicative timeline is the independent geologist report has been written. We're just finalising the prospectus, and we plan to be hitting the listing on the ASX in October and hitting the ground running also in October at our Mount Isa East project. The proposed IPO structure is 40 million shares at 20 cents for $8 million market cap, which gives us an enterprise value of about $3 million, which is quite low, which means that shareholders are extremely leveraged to success. Now, the flagship project, the Mount Isa East project, is in a proven copper gold province. It's located in the world-class Mount Isa Inlier. It's targeting IOCG and shear-hosted copper and gold, over 1,300 square kilometres of tenure, multiple third-party options or processing options. Glencore is processing third-party ore at the moment. There's 5 tenements in total, 3 are granted, 2 are ELAs. A strong network of shear zones and structures with over 10 copper gold prospects already identified for us to follow up. Just zooming in a bit more detail, it's the right address. There's a geology map here, and you can see there's the western fold belt and the eastern fold belt on the east, and we're right down the centre in what they call the Kalkadoon Leichhardt belt, and there's numerous deposits, copper gold deposits in that belt. One of the more notable ones is the Barbara copper gold deposit. It's about 4.7 million tonnes at 1.6% copper and with some gold as well. And you don't need a huge deposit to make money here because you've got the third-party processing options. If you can get a series of satellite deposits, you can really add some value. And our tenements, so you can see a geology map there. We've already identified 5 priority camp scale targets, which are shown on the map there. And they range from old workings, like at the Big Hill prospect, where there's an open cut of around 140 metres long, 15 metres deep. The old timers mined out the oxide ore. They've never explored underneath it. Soil anomalism does exist along strike, and we'll be following that up. Another example is our King Solomon Mount Zuzi trend. Mount Zuzi is 6 kilometre long copper and soil anomaly with very strong copper anomalism, up to 1,500 ppm copper. There has been some historical drilling there in the 90s, 2 metres at 1.1% copper from a 46 metres. So they're really strong results with over 2.5 grams gold, and really strong results that have never really been followed up. There's a number of other copper and soil anomalies there to follow up, and we intend to get on the ground in October and get it drill ready as quickly as possible. Now, moving over to WA, our Yamana Gold Project in WA. I'm really excited about this one. It's about 140 kilometres east of Laverton in the Yamana terrain. There's two greenstone belts there. There's the Yamana Greenstone Belt and also the Dorothy Hills Greenstone Belt. Now, we have two ELAs in that area, which should be granted in the next few months. One of the tenements is right along strike from the Grueware gold deposit, and I'm just about to zoom in to show you details about that. So zooming in, you can see our large tenement there shown with the black outline. The Grueware gold deposit I'm just pointing to there, it's only less than 5 kilometres south of our tenure or our ELA. Now, the Grueware gold deposit, it's on the Dorothy Hills shear zone, and it's a 6 million ounce deposit. It's a substantial deposit. The Dorothy Hills shear zone continues onto our ground. You can see we've got over 5 kilometres of strike length through our ground, which has had hardly any drill testing at all. So this is a really underexplored tenement in a very strongly mineralised belt. And also, this belt was only, the Grueware gold deposit was only discovered in 2013. So relatively, the Yamana sort of gold terrain is a relatively new gold terrain in WA. Moving further to the west now, to the Murchison region in the Gulliwa Greenstone Belt, is our Guru Gold Project. Now, it's not far from Depletion Mine, about 26 kilometres away. Depletion Mine, owned by Silver Lake, has around 1.3 million ounces of gold, very high grade, 13.5 grams per tonne gold, and a substantial amount of copper mineralisation as well. So the tenement is well located to infrastructure. It's in a known mineralised terrain. Now, interestingly, you can see our tenement outlined there in yellow. The Geological Survey of WA reinterpreted the greenstones for this area last year based on some new geophysical information. Now, the greenstones in this area are under shallow cover, and so it's hardly had any exploration. When they reinterpreted the greenstone boundary, that moved it further south here, and we got in there as an early first mover advantage, took the tenement out. It's had hardly any work on it. It's now granted, so we can get in there and do some rapid RAB drilling lines across there. We've already identified a number of targets in the geophysics to follow up on, so that's a really exciting opportunity as well. So the key takeaways for Cooper Metals are these. It's a new copper-gold explorer with 3 highly prospective copper-gold projects in Queensland and WA. It's all in underexplored tenure in proven mineralised terrains. We have a very low EV, so that gives the opportunity for the share price to be highly leveraged to any exploration success. We plan to list on the ASX in October this year. We've got a strong pipeline of early stage targets to follow up. We'll have year-round news flow from these 3 project areas. Thanks for your attention. Look, the aim is to get to drilling as quickly as possible. So that will be on our flagship Mount Isa East project. So we're using these next couple of months to refine our targets, do some more desktop work. Then we'll have a little bit of geochemistry and geophysics to do to really pinpoint those drill holes, and we'll be drilling as soon as possible at Mount Isa East as soon as we come on market. Also, we'll be we have a granted tenement in WA at our Guru project there, so we're very keen to get in there and do some RAB drilling across some areas that we've identified as highly prospective. And in our Yamana project, we'll be working on the ground there to get that drill ready as quickly as possible. So there should be a lot of news flow coming out in that first 3 months.
Hi, my name is David Kelly. I'm the Managing Director of Aquirian, and thanks for having us here today to give you this presentation. Normal disclaimer. So Aquirian Limited, we've just recently listed on the stock exchange this week. We're an emerging specialist mining services company with a focus on supporting mining clients across their operations with people, equipment and specialist products. So in terms of our business, we operate with a tier 1 client base. Our business units are complementary, which cross-pollinate each other to sustain our growth. We've got a clear and focused future strategy, and our company is led by a proven and reputable management team. And really importantly, since our first day of operation, we've been profitable and we're continuing to grow year on year. We are really happy with our leadership team. We've recruited Bruce McFadden into our business as our non-executive chairman, and Alex Atkins has joined us as non-executive director. Myself and Greg were the founders. Greg was the original founder. And then we've recently had Mark Hunter join us. Mark's had a 30-year career with Alcoa as right up to CFO of Global Alumina. So we're really pleased with the calibre of our leadership team. As I mentioned, we do work with tier 1 clients across the mining industry, whether they're mining houses or contractors. And we also supply through our Maglock business to the Defence Force Australia-wide. In terms of our business, we have a number of brands that face the market, and they're split into 2 divisions, our People Services division and our Mining Services division. And they operate as independent brands, but they support each other and cross-pollinate opportunities. And they're all very focused in the one space, predominantly around drill and blast. In terms of our People Services division, which makes up around half of our revenue, that's split into 2 market-facing brands, one being Tbs Workforce, which is your traditional recruitment and labour hire business. The Tbs Workforce business specialises in hard-to-fill roles within that drill and blast space, so shot firers, MPU operators, and in particular drill fitters and auto electricians. We work with a number of the leading OEMs in that space. I guess we recruit what we call the unicorns, which allows us to charge a slightly higher premium for those roles. And then the other business in that division is Modular Training. Modular, again, is a specialist training company. It trains predominantly shot firer training in Australia, focused in WA at the moment, with opportunities to expand into Queensland and New South Wales, hopefully later this year. In terms of our Mining Service division, as I said, makes up about the other 50% of our revenue, and it's got 2 key brands, one being Tbs Mining Solutions, which is a supplier of consumable blasting products, including our own collar keeper, which we'll get onto on the next slide, but also equipment. So we supply equipment in 2 key areas. One is we've got quite a large underground portfolio, and the other part of it is the open cut drill and blast space. So we provide support equipment into that space, things like shot firers, vehicles, mobile site facilities, magazines, all on dry hire and short-term lease basis. And the other business in that division is Maglock. Maglock's a specialist manufacturer of explosives and dangerous goods storage facilities. So we produce them in-house, and we supply them to mines right across Australia, and explosives companies, fireworks companies, police and defence force. Excitingly for us is our innovation, and at the moment we've got the collar keeper. The collar keeper we developed in early 2018. We've sold just over $6.5 million worth of collar keeper to date around the world, into 12 countries. And the collar keeper is all about protecting a blast hole once it's been drilled. So maintaining blast hole depth and ensuring we don't get collar collapse. So reducing fallback, stopping re-drills to ensure quality blasts and also maximising energy into the ground. Our next phase of innovation is what we're calling the collar keeper system. The current collar keeper protects the hole after it's been drilled. Drill the hole, drill moves on, we put a collar keeper in. A new system is all about protecting the blast hole from the moment a drill engages with the ground. So as soon as that drill bit starts turning, then we're protecting the hole. This is really exciting for us, and this is where we see a massive future for our company. We're working with leading mining contractors at the moment who are giving us access to drill rigs and sites to do our prototyping. So this is a real blue sky opportunity for us, and we see it being a significant part of our company going forward. So in terms of our future strategy, it's all about developing and commercialising our existing IP. So that being the collar keeper that we've got today, and then investing in developing new technology around the collar keeper system. We're looking to expand our manufacturing capacity and capability for our maglock business. We're looking to grow our fleet portfolio both in the underground space and the open cut support arena. And we're also looking at selective and accretive M&A opportunities as they present themselves. That's really for the mining service division. In terms of our people service division, it's all about focused organic growth. That'll be into adjacent geographies, expanding into the East Coast, but also markets. So where we're recruiting people that have skills that are transferable. We've recently started doing work in the oil and gas industry, for instance, as an example. So following our listing this week, we've now got 80 million shares on offer. We market capitalisation on listing of 16 million with our 20 cent list price and 2.5 million options on issue. So really, really tight capital structure. Top 20 shareholders control just over 70% of the business, and the board has just under 33% ownership in the company. In terms of our overall track record today, as we mentioned earlier, we've been operating about 4 years now. And in every year of operation, as I said, we've been profitable and we've been growing strongly. Over the 4 years, we've completed 2 acquisitions. So the modular training business and the maglock businesses were both acquired and integrated into companies, and both have shown significant growth since we acquired them. And obviously this year we've just listed, and now we'll be looking to continue that growth. And as I said, focused on our collar keeper, focused on the equipment, and increasing our manufacturing capability. So in summary, Aquirian, we're a profitable, rapidly growing mining services provider with growth potential in all of the business units. We've got a strong industry-supported innovation pipeline, and that's both from end-user mining houses and the contractors. We do deal with a top-tier client base across the resources and mining sector. We're led by an experienced board and management team. Our current growth to date has really been organic and funded from cash flow generated from the business. So having the recent raise just gives us flexibility to really push ahead. And as I said, strengthening the balance sheet will allow the fast tracking of all those growth opportunities. And thank you for your time today and listening.
Thanks. Now, decarbonisation and electrification are growing globally. Decarbonisation is effectively the generation of power with low carbon emissions, and electrification is the use of batteries. Now, batteries store power, batteries discharge power, but batteries don't generate power. So for both decarbonisation and electrification, we need reliable, carbon-free baseload energy, and that's what nuclear is. nuclear is perfect for that, the world's growth in power as we move forward. And the issue we have at the moment is the supply demand. There's a lot of demand out there as we continue to grow our nuclear fleet to satisfy the power demands, but there's been no incentive for new production to come online. So as a consequence, there's a shortage of supply. Now, that's further impacted by COVID last year with the Kazakhstan and the Canadian operations being reduced in terms of their supply. So the only way for the industry to get new supply into the market and meet demand is for the uranium price to go up. And that's the only way it can go, is up. So we built a strategy a couple of years ago where we developed a strategy to acquire projects, to acquire tenements that met a defined criteria. And then we want to explore on those tenements to build a heap of resource base. And the defined criteria I'm talking about is upgrade. Upgrade is an in-house patented process that we developed, and we apply it to these projects, and they reduce the cost base by the order of 50%. So that's the catalyst, that's the incentive for us to go and explore, because we know if we've got a nominal grade project and our peers have got the same grade, we can develop that project at a far lower cost than them because we have the upgrade process. Now, find a developer strategy, but we've been delivering on it. We've gone and acquired £48 million of good grade assets in Australia. We're successfully exploring on our largest tenement position in Namibia. We've got a few recent discoveries, and obviously, as I said before, the upgrade process is what lowers the cost base and really gives us the benefit and the incentive to go and explore and develop. So Namibia is a fantastic province. It's the fourth largest uranium province in the world. It's got an industry, uranium industry that's been operating for in excess of 45 years. So it's familiarisation with uranium. It's familiarisation with anything associated with it. We've got the Namibian Uranium Association, the only country in the world with a dedicated uranium association in that country to look after look after explorers and producers, and they're the conduit to government, stakeholders, shareholders, general public. They do a fantastic job in country. Now, we've got the Mariniki Uranium Project sitting up north of the Rossing mine. It's been sitting there since 1976 operating. It's a 61 million pound resource. We've managed to increase the grade about 50 times to about 5,000 ppm using our upgrade process. So that's where we developed upgrade. That's what we learned, how it applies to all these deposits in Namibia. So what our target mineralisation is, the calcrete-hosted shallow paleochannel. So we believe the uranium is leached from the granites in the east, flowed towards the coast over millions of years, and in these old river systems, as we call them, paleochannels, and deposited where the conditions are right. Generally, these paleochannels are less than 20 metres deep, so they're really shallow exploration. So we've built up a ground position in Namibia with, as I say, the largest in the country, and we're focusing down in the Namib area in the south of this Orongo region at the moment. So Namib, we looked at this area because General Mining explored on it for late 70s, early 80s. General Mining morphed into GenCore. They found the known deposits of Nangarheinrich, Tumas and Oceananus. And we thought, well, let's just move upstream because uranium's got to flow through these tenements to get to the known deposits. So we picked up this ground upstream. We've gone and discovered the Copies project, the Herobed project. We've just flown an airborne EM over it. Results just out last week, and that's given the information for our geological teams to now go and develop an exploration program, drill program around those results. So it's a great province to be in because there's a plus 270 million pound of uranium there, and we're already demonstrating that we can find more. So we're looking forward to exploring in this area. I won't give too much detail on these. We don't have the time to do it, but I'd welcome anybody coming back to me at a later date to ask further questions on these. But quite an exciting province to be in. Now in Australia, we've picked up 48 million pound. I mentioned earlier. We paid equivalent of 4 cents per pound in the ground for this uranium. And we know that we haven't got a resource on Uruguma. We can't announce it. It's an historical resource, so that actually would lower the cost even further for these projects in terms of per pound. So 4 cents per pound, I'll take you back to when I was consulting to Extract Resources in the 2012, 2011, somewhere around there. They sold the Husab project in Namibia for $4.50 per pound in the ground. And the Kazakhs and the Chinese just did a deal where the Chinese picked up 49% of the asset in Kazakhstan for $8 a pound. I'm not suggesting there were $8 or $4.50 a pound for these assets, but what I'm telling you is that these were an absolute steal when we picked it up for 4 cents a pound. So we've got heavy leveraged uranium price on these projects, plus any value we can add. And talking about value add, the Angela deposit, the largest of these deposits, 31 million pounds just south of Alice Springs. The impediment to it being developed previously was a very high acid consumption, 100 to 120 kilos per tonne of acid in the leach. What we've done is we've applied our smarts picked up from Upgrade, and we've lowered the acid consumption by 80%. So we've essentially reduced that sort of cost by about $32 a pound. So a fantastic result for us on that, and demonstrates what sort of value we can add. So just moving on to Upgrade, it's, we've got great assets in Namibia. We've got exploration success there. We've got these good assets in Australia. And then we've got the icing on the cake. The Upgrade process is a process that we developed in-house in collaboration with CSIRO. We've managed to increase the grade of the Mariniki Uranium Project from 93 to 5,000 ppm prior to leaching. It rejects plus 95% of the mass. It uses commonly used unit operations that you would find in a base metal, gold, or mineral sands plant. And we've configured them in an unconventional manner for uranium. So that's the innovative nature of it. And what it does for us is that we know it lowers the CapEx by 50% and the OpEx by 50%. We've done a scoping study on the Mariniki project. We haven't been able to announce the financial metrics around it because it's an inferred resource at Mariniki. But essentially, it reduces the mass to a point where we've got an option, and we can either leach it and then produce yellow cake on site, or we can take that concentrate off site to a third party leach refinery. And there are options in Namibia for that, plenty of them. So we could, so that if we leached off-site and refined off-site, that lowers the CapEx even further because we don't have to build the leach and refinery. So that really gives us optionality. And what it means is that not only can we develop our projects at a lower cost, but we could develop smaller projects, and we could develop lower grade projects than our peers. So it really puts us in a box seat, particularly for these calcrete hosted deposits, which it applies to. And nobody else has got the Upgrade process, but Elevate. So that's a fantastic position for us to be in. Just a little bit about the company. We've got plenty of experience on the board. We've got in excess of 60 years of uranium experience. We've got a small number of shares on issue. We've got no debt. We've got cash in the bank, which is a fantastic position to be in. And we've got skin in the game as board management. We've got 6% of the company. We believe in what we're doing. We believe in what the company and what we have and how we can build the company for shareholders. So a fantastic position to be in when you're cash in the bank and you don't need cash for the next 18 months, and you can go on your aggressive exploration program. So very happy with that. Now, just in summary, Namibian tenements, largest position for nuclear fuels in the country. Successful exploration occurring. We've discovered the Herabeb, we've discovered copies. We've got plenty more assets to explore. We've got the 61 million pound uranium resource at the Mariniki Uranium Project, which we've lowered the cost base by substantially. We've got 48 million pound of resource in Australia, which we're already demonstrating how Upgrade can lower that cost base. We've got an experienced team with a track record. And what a great time to be in the uranium industry. The need for baseload carbon-free energy continues to grow. So we're really excited about what the future holds for the company and also for the uranium price. So thanks for your time. Look, we're not, isn't it unusual? We've, since my time at the helm, we've done a capital raising nearly every year, and we raised even money at the end of November last year. We then have options that have been in the money, so they've been exercised, picked up another 3 million just recently from that. So we actually don't need to do a capital raising before the end of next year, which is a fantastic position to be in. Yeah, look, the airborne EM survey we did in Namibia has really given us the impetus to go and explore and plan our drill programs. So it was something we had to do to really accelerate our exploration programs, because it gave us the outline of all the paleo channels, the indicative depths, and where we might find some uranium mineralisation. So we're planning, our exploration team now planning some drill programs. So the news flow coming up over the next 6 months in particular will be, out of that drill program. So we've secured a rig for the next 9 months. Pretty difficult to get hold of, but with money in the bank, you can do those sorts of things. So we're looking forward to what comes out of those exploration programs.
Well, thanks a lot for having me. It's great to be on again. I'm here to talk about the uranium sector. But before I do that, we've of course got the obligatory disclaimers and speed reading test, 2 of those in fact, and I'd like to do an introduction to Bannerman and spend a few minutes talking about the company that we've built, which will also help everyone out there understand why I can be so immersed in the uranium sector and have the pleasure of sharing a few insights and a bit of knowledge today. Bannerman has a current market capitalisation of sub 200 million. We've got no debt, and at the end of the financial year, boasted 12.5 million in cash. It's a very strong board, good register, and as you can see from that share price graph, we've started to enjoy the rebasing and appreciation that the entire uranium sector has had since the end of last year. Our project in Namibia is the Atango Project. It's a globally significant project with an enormous uranium resource. We have low technical risk. It's a conventional truck and shovel open pit bulk mine project. And Namibia, as you can see from that slide, has excellent supporting infrastructure, as well as being an established uranium jurisdiction that has supported the exportation of uranium for more than 45 years. We've been there since 2005 and we've established a very strong in-country presence. I had the benefit and privilege of actually living in Namibia for almost 6 years myself. So I understand the country very well, and we've got an in-country team of Namibians. And what we've introduced with our project over those 15 or so years is more recently a degree of scalability that complements the exceptional leverage that our project scale offers. With this next slide, I'd like to share with you the Atango journey. As I said, we've been focused since 2005, not only in the uranium sector, but on this asset in Namibia. In the early years, we were fortunate to have raised money during a very significant uranium boom. And we used those funds to do the very expensive resource drilling and early feasibility study work associated with a very large project such as this. Now, as we all know, after 2011, this sector went into a deep bear market. And whilst we had some low cost of capital funds still available to us, as that bear market wore on, we needed to be more and more careful and vigilant with the way that we spent that money. This work was all driven towards the large-scale Atango project at a throughput of 20 million tonnes, which would deliver average annual production of 7.2 million pounds of U3O8, a giant in this sector, and when built would be a top 10 uranium mine in the world. But in the last couple of years, we started working on some scaling options. We wanted to have a second avenue, a second road or pathway with which we could adapt to some of the changing market dynamics after this bear market. And a year ago, we were very fortunate and pleased to release the Atango 8 scoping study. And that created a new goalpost, an alternative but very much parallel opportunity to develop our asset at an 8 million tonne per annum throughput. And very recently, in fact, just this week, we've now released the pre-feasibility study for that Atango 8 project. So let's just spend a couple of minutes looking at Atango 8. So first of all, as I say, it's an 8 million tonne reduced throughput, hence the 8 in Atango 8. We'll be producing 3.5 million pounds per annum over a 15-year mine life for 53 million pounds of total production from a much larger resource of 207.8 million pounds. There's a very high processing yield of 87%, with a low strip ratio, which then generates an operating cash, total cash, including royalties, of under $40 a pound. With an upfront pre-production capital of 274 million and an assumed uranium price of $64 a pound, we generate a post-tax NPV of $222 million US. Our payback is under 4 years, and we generate a post-tax internal rate of return of slightly more than 20%. We talked a bit about how big our resources are. It is world-class. It's almost 208 million pounds of resource just at Atango. We do have satellite deposits on top of that, and an ore reserve for the Atango 8 project of 60 million pounds. Bear in mind that the deposit is also open at depth, and that ore reserve could expand from there. The key upside that also enhances our leverage to the uranium sector is the chance to expand, either expand the mine life or expand production while we're a uranium producer and profitable. You can see the final pit design for the Atango 8. That's after 15 years or 53 million pounds. Now, if we go back to the original 20 million tonne project, you can see that partway through the project and its ultimate mine life, it's simply a increased scale of what we're already doing. Now, I'd really encourage you to go and have a proper look at the vast technical disclosures that we've included for the PFS. And that is the path forward. As you can see from that, we're looking at being in production by 2025. And when I talk about the uranium sector, you'll see why that is a significant milestone to be aiming for in terms of sector deficits that we expect to open up. Now, I'd like to spend just a couple of minutes talking about something that is extremely important in mining generally, but certainly to the uranium sector. And that's license to operate, both legal license to operate, but also social license to operate. First of all, Namibia. As I say, I lived there for 6 years. It was a fabulous experience. It's a very stable country. It's got a long history of exporting uranium, and it's got a long history since independence of stable politics, safe and secure, and a strong rule of law. The government regularly loses court cases, which is a good thing in Africa. Turning now to social license to operate. Over more than a decade, we've built up some serious environmental credentials in country, highlighted by a baseline that goes all the way back to 2008 and our environmental clearance certificates already in place. We've got social credibility as well, and our social leadership includes being regarded by both industry and community as leaders in CSR or ESG in Namibia, and also building up trusted relationships with the community over those 10, 15 years. And finally, we've got strong government support. We've been in country for a long time, and we also have a 5% local shareholder, the One Economy Foundation, which is a very important part of the social responsibility construct in Namibia. Turning to permitting, we have a mineral deposit retention licence, which for our stage of development is really the ideal form of tenure. It gives us flexibility and security. And we do have the Atango Mine Environmental Clearance Certificate in place, and the external infrastructure or linear infrastructure environmental certificates also in place. As I say, we have support both at a community, political, and government level. But if I take a step out for a moment, what does this mine do at a global level? As well as all of that local impact, we have a very serious impact via the fact that we have scale and we're in the uranium sector. As you can see from those numbers, we, once in production, will seriously move the dial on decarbonisation. And when we start talking about uranium, you'll see just why that is so important for the advantages to our sector, but also directly to our company and our capacity to finance. So in summary, we have a world-class asset with a very serious and large scale of asset, where the economics are robust, as you've seen from those PFS numbers. We've got a strong environmental, social and government support. we're in Namibia, which has been exporting uranium for more than 45 years. The project is de-risked technically. Not only has it had a vast body of high quality technical work, we've run a pilot plant, and now we've further de-risked the Atango 8 pathway to development through a robust PFS that confirmed the scoping study numbers. And finally, with the development of Atango 8 and these dual pathways to development, we have an alternative streamlined development path with low development hurdles and a pathway to production by 2025 that then enables us, once in production and profitable, to consider increasing the scale, potentially all the way up to the originally envisaged 7.2 million pounds of uranium per annum. Now I'd like to turn to the uranium sector. And as you can tell from all of that, we are embedded in this sector. And because we've got such strong leverage to the sector, I've had the pleasure and opportunity of becoming somewhat well-known, you could say, in the uranium sector. I currently co-chair the World Nuclear Association's committee or subgroup that determines the nuclear fuel and uranium demand out to 2040 as part of their nuclear fuel report. I also am an expert contributor to the UN's Economic Commission for Europe on uranium and have had various roles at Namibian and international industry level. So I'd like to share that with you just so that you can understand that I do spend a lot of time thinking about uranium in the bigger picture, but also I've had a lot of opportunities to talk to people in this sector and really embed myself in what makes this sector and the broader nuclear sector tick. So the uranium sector is characterised today by some very attractive dynamics today, but also with very strong key thematic drivers that will define the tomorrow. So if we look at the dynamics today, the first thing to understand is we are in a sector deficit. We're running a deficit of about 20 million pounds per annum versus total consumption in reactors of about 175 million pounds. That 20 million pound deficit is after taking into account secondary supply sources. On top of that, last year, the sector had an additional deficit that was caused by COVID-related supply disruption. Those supply disruptions were predominantly in Canada and Kazakhstan, but also in Namibia, which is the third or fourth largest producer of uranium. Now, in addition, we expect those COVID disruptions to extend. We did have Cigar Lake, the world's largest uranium mine, offline for a period of this year. Kazakhstan is just starting to flag that they might have further production disruptions as they move into lockdown and start to achieve their largest case numbers in the history of the pandemic, and the inevitable disruption at the edges to mines around the world as they continue to adapt. And that might only be a few percent here or there, but of course it adds up, particularly when a sector is already running a substantial production deficit. Now, against that immediate deficit, we also have the decade of depletion in this sector. So over the course of this decade, 4 of the world's top 10 uranium mines run out of ore. In fact, 2 of those mines, Ranger and Cominac in Niger, have already closed. On top of that, the nature of Kazakh production, and Kazakhstan does dominate the uranium sector, the nature of Kazakh ISR production is that many of those assets that have really delivered the cheapest uranium into the sector over the last 10 years, they will start to deplete and they will start to taper off. Where does the supply come from? Well, it's really quite limited. And that is because there's been a deep underinvestment in uranium development. That's partly because of the bear market and also driven by the fact that political implications restrict the number of uranium ore bodies that can be contenders for development. And we've seen that even more recently with uranium bans in Sweden and looks likely in Greenland. Against all of that supply disruption, there's steady demand growth. This is a growing industry. driven by China and their decarbonisation imperative, but also the key markets of India, Russia, and the Middle East. Because of the decarbonisation, we're also seeing the traditional markets, such as the US and the EU, reverse a trend over the last decade of declining nuclear power production. And we do expect those markets to start growing again as decarbonisation drives a whole range of policymaker decisions. So what does all that mean right now? This is the World Nuclear Association's Nuclear Fuel Report, demand and supply numbers for uranium. As I said before, I'm very familiar with these because I co-chair the working group that determines those demand lines. We're looking at the reference case scenario. There is a lower case beneath this, but an upper case that I'll come to as well. What you're looking at there is those light blue bars are current production of uranium when the report was published in 2019, and the pale blue bars are secondary supplies. So, for example, that's uranium that is produced from wasted or depleted uranium sources when the enrichment technology wasn't as good as it is today. There are a number of mines that have been forced into care and maintenance. That's because it doesn't make sense to run those mines and produce uranium in the current economic paradigm that we have with such low uranium prices coming out of a long-term bear market. Those care and maintenance mines are shown in the gold bars. And there are a small number of projects there that are ready for development, including our Atango project. So what does this all say? Well, what it says is that pink area is unspecified supply. In other words, that is supply that will need to come from mines that are not yet sufficiently advanced for WNA to have them in their database. You could think about that as a deficit. So you can see from 2024, a sector deficit will start to open up. And if we don't see very significant incentive pricing to bring on new projects, that deficit will stay as it is. It'll stay in an unspecified or an unknown supply environment. Now, what I'd like to do here is emphasise that this report was published in 2019. Since then, we've had COVID disruption, particularly in 2020, but also 2021, and the large Kazakh giant Kazatomprom extend some supply discipline measures that they have in place. And as a result of that, the yellow arrows indicate where uranium supply has tracked below the WNA estimates on this chart. As a result of that, there's been inventory drawdown by the utilities to meet that deficit. And we've also experienced the relatively new phenomenon of junior buyers in this sector, competing, as anyone who follows this sector would know, with financial investors such as Yellowcake out of the UK, or the Sprott Physical Uranium Trust, which has now been established with the acquisition of UPC in Canada, next year to list in the US market. I talked before about 2025 being a very important year for that deficit starting to open up, and of course for our production at Bannerman. And that really starts to gap in 2028, which is about the timing that Bannerman would be considering expanding its Atango project and adding additional production. If you move all the way to the right there and look at 2040, I've just indicated where the uppercase scenario would track by 2040. So if we start to see some of the key drivers of nuclear power come to be, as I certainly believe they will, that is more of the supply challenge for this industry that will need to be addressed and achieved by 2040. It's an open market. So, of course, the way that that will be addressed and achieved is through increasing incentive prices. The picture of today looks very supportive for the uranium sector, of course, and we've just talked about that. But I'd like to start looking at some of the key thematic drivers that are driving sentiment in this sector and really generating a big flow of funds, particularly from the smart money into the uranium sector. So at a global level, the biggest single driver is the decarbonisation imperative. It's driving a whole range of industries, but it will have a particularly acute effect on uranium because it's a very tight supply picture. In addition to that, expansionary monetary policy is a game changer for commodities generally. And for uranium in particular, we're experiencing geopolitical tensions which have a profound impact on the industry itself. So let's have a look at what these economic paradigms are doing to the uranium sector specifically and its customer base in the form of nuclear power. So the first one is, as we all know, the world's largest economies have now committed to decarbonisation. That will have a profound effect because they now have accountability. They have a deadline. Policymakers and bureaucrats can no longer work with very rough, amorphous estimates, which have typically been serviced by simply introducing more renewables into the system. Now that there's a deadline and a backstop date where decarbonisation will either be achieved or failed, policymakers and bureaucrats have to work with the hard nitty-gritty of economics of energy. And what we know about energy economics is that intermittent renewables have to be firmed. They have to be supported by storage. And that storage equation is becoming more and more expensive, more and more risky. And policymakers are starting to understand that too much intermittent renewables puts at risk the resilience and reliability of an electricity grid, which can have, disastrous effects on an economy. That is golden for nuclear power, particularly since it's a 24/7 clean, emissions-free generator of clean electricity. The electrical output in general will need to increase because of the electrification of everything, not just the electrification of transportation that we hear so much about with EVs, but to achieve decarbonising, particularly within some of the hard-to-abate sectors, we will see a wholesale transition from other energy sources into the electrical grid, again creating huge opportunities for clean baseload nuclear power. No country is more exposed to the challenges or the opportunities of this than China. And in their 14th five-year plan, they've come out strongly in support of nuclear power, a very direct driver of both today's industry, but also the industry of tomorrow. And then finally, we hear a lot about SMRs, small modular reactors, and next generation nuclear technology. Now, there's a misconception there that they will in some way cannibalise or reduce the amount of demand for conventional large-scale nuclear. And I just don't believe that'll happen. And the reason is that SMRs, small modular reactors, are a far more flexible form of nuclear power that are already being deployed into new markets. They are anticipated to be built in remote locations, in situations where the grid demand is not sufficient for a large-scale nuclear power plant. And also they're being used increasingly for new industrial applications such as district heating and, importantly, for the production of green hydrogen via hot electrolysis, which is far more efficient than today's cold electrolysis technology that's used or will be used for other forms of renewable energy such as solar and wind. And finally, we're probably hearing a lot about the use of SMRs to displace coal generation. And you can go to some of the recent publicity that Bill Gates and Warren Buffett have had with what they're doing in Wyoming, where they are identifying a coal-fired plant that needs to be turned off, using exactly the same grid infrastructure that exists for that, and building an SMR effectively in the car park next door. The coal-fired power station will switch off. A lot of those people will then go and work at the nuclear SMR, which will then switch on with the absolute minimum of disruption to either the grid or the form of baseload electricity that can support other aspects of industry in the area. Now, when we start to look more at the expansionary monetary policy, that's generating, as we all know, as resources investors, a commodity super cycle and a flight to real assets. Where that helps uranium in particular is we haven't, as an industry and as a commodity price, we haven't yet lifted. When you look across the board, most commodities have enjoyed quite spectacular increases in their commodity price over the last 18 or 24 months. Uranium hasn't done that yet. And the smart money, and in particular the money that's transitioning out of relatively low risk bond yields and other forms of static investment, are now eyeing off uranium as an asymmetrical risk profile that carries a lot less downside risk than other commodities. That's creating a real impact in our sector. Because it is a small sector and a relatively small value sector compared to industrial metals such as copper or precious metals such as gold and silver, these even the beginnings of the impact of generalist investors and speculators are being felt. Initially in equities, and that's the re-rating that I showed with the Bannerman slide, but also with the development of the Sprott Physical Uranium Trust, the capacity to have an impact at the commodity level itself, which with the force of money is widely expected to increase the uranium price ahead of the natural demand and supply imbalance that will ultimately cause a re-rating. One thing that distinguishes uranium from other commodities is there's a dramatic imbalance geopolitically between the supply and the demand. The United States, for example, consumes about 25% of the world's uranium and produces effectively nothing. Europe accounts for about another 25% of the world's uranium and produces exactly nothing, whilst Kazakhstan accounts for about 40% of the world's uranium supply when they're at full production and consumes nothing. That concentration continues on all the way down the line. In fact, the only country in the world that's got any semblance of balance is Russia on the one hand and Canada on the other, with Russia being heavily weighted towards consumption and Canada being heavily weighted towards supply. All of this works together to create for our sector, in particular, both uranium and nuclear power opportunities from the huge attention that's being placed on ESG. Uranium, by its very nature, is an ideal metal to fulfill ESG requirements. Not only does it have a profound impact on the environment, but in places like Africa, it has a profound social impact and also contributes to important governance objectives of third world countries. On top of that, we are seeing a transition which will enable nuclear power and ultimately uranium to benefit from green finance. These are all of these very strong key thematics. And if we look at how they play off against these core economic paradigms that are driving the world at large, you can start to see that many of these drivers are heavily supported by one or more of those core economic paradigms, of course, centrally driven by the decarbonisation imperative. So there's some more information on Bannerman's management team. It's an exciting company in a truly exciting industry. The uranium sector has just over the last 6 months started to obtain a level of interest from the generalist investors and from people who aren't purely contrarian. And I think as an investor looking at this sector and looking at potential investments in the sector, it's an ideal time to be educating yourself and also starting to make decisions about how to position amongst a relatively small number of investee companies in a truly exciting industry that's destined to grow and appreciate. So thank you very much for having me on. It's been a pleasure, and I really look forward to the rest of the presentations.
Thanks very much to the JMM team for hosting this event. Look, Black Earth Minerals is a ASX listed company, BEM, and we've said from the outset that we've had a focus on get into cash flow as soon as possible. And thus the title of the presentation today, A Clear Pathway to Cash Flow, which, having just come back from Diggers, I have to say that I think that there is more and more emphasis on companies, irrespective of commodity, relating to investor interest as it goes to when are you going to reach cash flow. In our case, our vision is very simple, has been the same since day one. We actually want to be a material player in regards to the global graphite supply chain. To that extent, we have two development pillars, one being the Munro Graphite Project, which many of you have probably heard me speak about previously. Look, it's in a proven location. Madagascar's a great spot to be operating out of. We have an exploration target which has highlighted a sizable graphitic domain associated with the project. And to that extent, it matches anything else in the world that you can find. We've done extensive test work in regards to our product and how it's applicable to the various uses. And again, we put out various announcements to that extent in terms of its applicability and suitability to the lithium-ion battery market, to the high quality end refractory area, and of course, more recently in the coarse flake use in expandable graphite and beyond. And the project is currently in feasibility study, which we intend finishing next year. And of course, we're looking at commissioning the plant hopefully around mid-2023. The second part, which actually turns us not from a pure miner, but into a sizable player in the supply chain, relates to the announcement that we made several weeks ago in the MOU associated with a joint venture with Indian company Medichem. Now, we're looking to build a project in India capable of producing 2,000 to 3,000 tonne per annum of expandable graphite. And again, that lifts the revenue stream. So typically the product that goes into or gets fed into a expandable plant would sell in the vicinity of $1,200 to $1,700 a tonne US, depending on the ultimate quality. But that sells for about $3,000 to $3,200 at the moment, and it's looking better moving forward. So it's a huge uplift and certainly beneficial for shareholders. Our priority is obviously to formalise this joint venture agreement, and things are going exceptionally well at the moment, and we hope to be making noise about that sooner than later. We already have a binding offtake in place with a company called Rapid Bergbau out of Austria, and they are a tier 1 buyer of expandable graphite. So we already have that in place before the joint venture is cemented, before the engineering is complete, and before we get into production. And that shows the level of demand for this sort of product, not just in Europe, but globally. And our plan is to basically commission a plant and be in cash flow this time next year. So we're really excited about that, and it really puts a new spin on the whole company. The other thing is the market conditions. We know that end users are becoming increasingly concerned about security of supply, particularly in coarse flake. And we get regular calls in regards to being able to access our coarse flake, which we take very positively. And we've seen also in the last few years a slowdown or a decrease in the coarse graphite flake supply, which has resulted in an increase in price. So conditions are perfect for us to get this project up and running, get into cash flow, and then effectively become a part end user of our own Munro project when it comes into cash flow 12 months later. Of course, there's more and more news coming out in regards to graphite in terms of the increasing EV demand and general lithium-ion battery demand, as well as the growing ESG thematic around the whole mining sector. In terms of corporate snapshot, I have to say that we've gotten where we've got. We only listed in 2018, so we've been around for just over 3 years. And I think it's testament to the calibre of not just the board that you see there, but the broader team that we've been able to progress it from first drill hole to effectively a fair way down our definitive feasibility study. Having said that, we have 215 million shares on issue, Our market cap is only around the $23 million mark, and we have about $6.5 million in the kitty. So plenty of money, and certainly when we're talking about the Metachem project, which is going to be about $3 to $4 million to develop, our 50% share is certainly well and truly covered within our current cash reserves. Madagascar, from a Munro point of view, is an important part. We specifically went to Madagascar to look for a graphite opportunity pre-IPO. Why Madagascar? Look, it's got over 100 years of graphite production history and export history, and it's regarded as a tier 1 location for end users to buy from. It's quality product. It's a significant supplier to the likes of China, India, and the US. And that's unlikely to change, particularly as coarse flake demand increases. And there are very few sources of coarse flake graphite coming out of anywhere in the world other than Madagascar. The Munro project, again, these green areas you'll see to the right-hand side are outcropping areas. So we know that we're in a graphite domain. That area covers about 7 kilometres by 3.5 kilometres. That upper area covering the Razafi resource already sits on a granted 40-year mining lease and only requires a final global environmental permit to be given, which is part of the feasibility study which we're undertaking at the moment. We've only explored 10% of the project itself, so the upside is significant from a resource point of view. But when you're only treating initially 500,000 tonne per annum and your resource sits at Razafi alone, let alone the broader thing, but just say Razafi at 11 million tonnes. Now that's 22 years mine life. So we don't want to spend too much. Having said that, we are drilling to the northwest area, that Razafi northwest area, where we've reported again in recent weeks some very encouraging visual core in terms of our perception of grade on that. And we're excited. The samples are here in Australia, and they're currently going through the works. And we all know that's taking a bit of time through Perth laboratories, but we hope to get some assays out as soon as possible. People have seen this slide before in regards to the project outcomes. Yes, it is a long life mine with plenty of upside, even if you expand it. The NPV and IRRs are certainly very attractive. Interestingly enough, at 500,000 tonne per annum, that's a nice small size to start and allows us to basically modularise the project offshore in terms of construction, bring it to site and basically put the thing together. It's low capex, and when you're a junior, the lower the capex, the better, but we want to be a material producer from day one. So capex at $40 million, initial production of 30,000 tonnes, as I said, makes us a material group. So people have seen those things, but I just wanted to re-emphasise those. The important thing here is the enhancement activities that we're currently undertaking. And that northwest area certainly excites us. I've mentioned before the leverage in terms of what 1% can have in terms of NPV and IRR, and we're certainly hoping for better than that, especially to be able to potentially mine there to start with during those first critical 3, 4, 5 years. So we're excited about that part of it. We're looking at lowering the capex by having a better sort of sharper numbers on some of the equipment. We're looking at improved recovery. We've just completed the pilot test work. We're reviewing the report as we speak, and we hope to put out an announcement on the outcomes on that very, very soon as well. So there's a lot of upside in terms of being able to impact the two critical issues here, which is IRR and NPV. So, stand by for that. We're excited, and that will progressively come out over the next sort of 3-6 months. This is just a pictorial of where we sit at the moment. It's got a very low strip ratio. Life of mine is 0.9 to 1. First 3 to 4 years currently is about 0.3 to 1. So we're not moving a lot of waste in terms of being able to get to the dirt, which has huge cost benefits for us. As I said, it's only a small plant, but it produces a material amount of product. We are blessed, and one of our differentiators is the fact that we are high in coarse flake content in our concentrate, and a lot of others, particularly out of the likes of Scandinavia, Australia, North America and parts of Africa, are still looking at small to fine flake, which is the lithium-ion battery market. That only constitutes about 30% of our product, and even less in terms of ultimately profitability. So our focus is really going to be on coarse flake moving forward, and we may get into the downstream battery-related industry on the medium to long term. The refractory side, we've already got stitched up really with RHI Magnesita, one of the biggest refractory groups in the world, and that's really to be able to produce that mid-sized material and ship it out of the port. We made a recent announcement regarding to accessing Rio Tinto's port, Port de Paix. And so the RHI people will just tell us effectively that this particular ship will head to Mexico or to China or Brazil or Europe, wherever the need will be. And finally, the coarse flake, which is the part that gets us excited, where, as I said, we can produce a product that we can sell for, say, an average of $1,200, $1,300 a tonne, and but we can realise much better numbers than that for a few $100s. And so we're really excited about that, and lots of news flow to come out on that, I'm sure, moving forward. The expandable graphite strategy itself, you know, we've done the work. We know and understand the resource that we have geologically, mineralogically. We know we can produce a top quality product, and that, of course, is reaffirmed by not only tier one end users who said that our product is first class, but also the fact that an independent laboratory in Germany tested material, and as it says in that bottom right-hand side, we could not find any restriction which could limit the application of this kind of flake graphite. So that was wonderful news for us, and it's the whole focus of us moving forward in terms of realising much higher revenue streams for shareholders. So having only made the announcement about Medichem a few weeks ago, there's plenty of whys in the market, and I just want to say why expandable graphite. Well, expandable graphite is used in a number of areas. Fire retardant, which, you know, from a society point of view, we've seen some horrific fires in high-rise buildings, and we just, you know, to get around that, a small amount, 2 to 3% of expandable graphite within building cladding can prevent a lot of deaths. So there's a huge effort globally to retrofit these things, as well as making sure mandatory inclusion to new high-rise buildings. It's also used in the production of foils, and that's something that we'll consider hopefully further down the track. But the interesting thing is it's made from coarse flake. And as I said earlier, the production of global coarse flake graphite has been decreasing over the last few years, and there's no likelihood that it's going to increase and meet the demand that's out there moving forward. So we're positioning ourselves on that. And of course, we'll be the only ASX listed company that is producing that stuff. So it's a real tick in our favour and a differentiator. Why Medichem? Well, they're one of the pioneers of expandable graphite. They've been producing the stuff for 20 to 30 years. We've been talking to the end users, both in the US and in Europe, who all speak very highly of the quality of the product that's produced out of Medichem. So we'll be building, the plan is to build a brand new facility. And to that extent, we also made an announcement about the offtake, which I mentioned before, with Graphit Bergbau in Austria. And they have the potential to take 100% of the product if we decide we want to sell it into that 100% market. Why India? Well, it's a well-educated and cost-competitive workforce. We've seen a lot of multinationals moving now into India. It's an exciting time, and yes, COVID is an issue, but it is globally, and things are, I believe, from the information we're getting, improving in India. But from an availability of the key specific skills, knowledge and experience relating to expandable graphite, it's certainly well housed in India, and we're going to take advantage of that. So at the end of the day, we will provide the raw material, initially from the market in general, and 12 months we'll be producing from Maneri after we get going in India. And so we will provide the joint venture company with the feedstock, and Black Earth will look after the sales. And Metachem, with all their experience and knowledge and understanding of how to do things in India, will basically be given an operating contract to run that project. There's also excellent government ties between Australia and India. There's the new Quad, which is Australia, India, Japan and the US. And of course, product is in demand in Japan and the US, and we could make use of that and the number of grants that exist on that basis. So the news flow catalyst moving forward, the Maneri pilot plant has been finalised. We have the report. We're just going through. It's obviously a fairly extensive report. So we'll be putting something out on that shortly. The exploration results are important, and they'll be coming out in coming weeks. And the Donnelly River prospect, we're currently sitting down strategically and saying how to get maximum value out of that project. The expandable graphite plan, of course, conclusion of the joint venture agreement, we hope to be very soon. Thereafter, take the engineering and costing, or effectively a DFS study. That'll probably take 8 to 10 weeks max. We'll commit to it at that stage. We have the funding in place, and we expect the project to take 6 to 8 months to construct and thereafter commission. So it is a focus for us moving forward, and it just re-emphasises our aim of being into cash flow as soon as possible. We'll continue to advise the market of BFS activities, including the appointment of an independent engineer. We're currently out to bid, and that's probably not too far away. Expanded resource based on the drilling results is obviously important because the impact it has on everything, including the MPV and IRR, which I mentioned earlier, and obviously continue offtake arrangements and discussions. And this is all within 3 to 4 months, but the news flow over the 6 to 12 months is not going to be any less forthcoming than the next 3 to 4 months. So there's plenty of news to come through. And with that, I'd like to thank people for listening today.
Yeah, thanks for the opportunity to present the Mamba exploration story. We're a recently listed exploration company based in Western Australia and focused on exploration for gold, nickel and copper in our 100% assets, all in Western Australia. Where are our projects and what are we exploring for? We've got 4 main project areas. The Darling Range project, which is quite close to Perth, around 30 kilometres from Chalice Mining's Julimar discovery. There we've identified a number of targets on our 3 tenements we have in that area, 4 tenements rather, that we have in that area. And we're aggressively exploring those projects. The second project is the Carlyup Creek gold project down in the Great Southern. It's about 150 kilometres to the east or northeast of Albany. There's historical workings been in that area and some very significant grades, but it really has been a forgotten goldfield for some 30 odd years. The third project is the Ashburton Gold Project, funnily enough in the Ashburton, and we've got a large tenement package there, and it's a craton margin style of deposit that we're looking for there. And really the fourth project is our Kimberley project. We've got a very, very large tenement package up in the Kimberley, and it's prospective for nickel, copper and silver in particular. So I'll go through all of those projects in more detail, but also just give you a quick snapshot of what the company looks like and who we are. I'm Mike Dunbar. I'm a geologist with about 25, 30 years experience in the industry, and I'm the managing director. The other board members are Justin Balson and Simon Andrew, who have been in the industry for around 30 years, or 25 to 30 years as well. And we've got a good team around us to help explore and develop these assets. We listed in February of this year, and we've really hit the ground running with getting active on all of the work that we've been doing. We raised $7 million and we've been aggressively exploring our tenement packages since listing. Current share price is around 20 cents, which gives us a market capitalisation of around $12 million and a enterprise value of around $6.5 million. So running through the projects in more detail, we're really, as I mentioned, we've got the 4 projects. The Darling Range project, it's near Julimar, just in the hills outside of Perth. It's around open farmland we've got, and very, very, very good infrastructure and easy to get around that area. What we've identified at the Black Hills in particular is a 6 kilometre long trend and an anomaly that we are very, very excited about. We've identified a PGE trend, a platinum group element trend, so platinum and palladium, that extends for around 6 kilometres through our tenement. We've also identified an ultramafic trend, which is coincident, and the airborne EM that we've flown and had processed already. We've identified 7 EM conductors on that same trend. So that's a really interesting trend. In total, on our total package, we've already identified and modelled 10 EM plates and conductors, 7 of which are on the Black Hills tenement. Zooming in, and where are we, and what does all of that mean? So you can see on the left here the Julimar discovery. Now we're around 30 kilometres to the northeast of Julimar. The challenge that for the Julimar trend extends for around 26 kilometres. They can only currently and have only drilled so far around 1,800 metres of that trend, and that's because of the state forest. However, for us, we have got open farmland and freehold land, so it's far easier for us to explore our area. And we've identified a 6 kilometre long trend on our tenements. What this looks like, on the right-hand side, you can see a slide of our Black Hills tenement on the left, and on the right is the Julimar, zoomed in on the Julimar. We've tested around 1,800 metres of that trend, and at exactly these 2 images are at exactly the same scale. You can see the intrusion that we've identified at the northern end of that 6 kilometre trend is almost identical size to the Julimar trend. So very, very excited by that area, and we're actively exploring that. But really, for us, it's all been about identifying the land areas and targets, and then de-risking that as best we can before we actually drill them. And so what we've identified is, as I mentioned, a 6 kilometre long 10 ppb platinum and palladium trend running through that farmland. You can see that farmland there and where it trends. What we've then done is looked at the geological mapping and mapped the rocks ourselves. And we've identified a magnetic image in the middle here. We've identified the dashed line, yellow line there is an ultramafic trend, which has been rock chip sampled and has got all the signatures and significant nickel anomalism on that trend, which is coincident with the PGE trend. If you go to the image on the right-hand side, what you can then see is a slightly different aeromagnetic image, but you can start seeing this next layer coming on. And so we've got a PGE trend, then we've got the ultramafic trend, but then on the right-hand side, we've got the PGE trend, the ultramafic trend, and now the airborne EM plates also modelled, which are all coincident with that one trend. So that really gives us a lot of confidence that in that whole trend, and really pushing forward now to explore that area, get on the ground and do ground EM in the coming months, and then looking at drilling that in Q4 of this year. So really excited to be able to de-risk that asset, and then also move towards drilling in the back end of the year when the crops have come off. Moving to the Calliot Creek Gold Project in the Great Southern. It's a crate on margin style of system, similar to the large systems that have been identified to the east of the Yilgarn at the Tropicana mine, and to the north of the Yilgarn at the Bernberg project and Bernberg deposit. We've got 2 granted tenements in the area, very, very good local infrastructure, and really interesting target area where we identified around 4 kilometre long trend of sediments and mafic gneisses, which host a very substantial soil anomaly. We've identified that and then really identified that the soil anomaly is up to 1.7 grams, so 1.9 grams, and some very, very high rock chips as well. So we'll be following that up. And if we zoom in on that area and what does the K-Up Creek area look like, you can see that 4 kilometre long trend running through that target area. And to the north, the northern workings, you can see there are reasonable sized workings that have been done in that area. The central area, far less work, but some decent sized shafts and prospecting pits. But the southern prospect, which is our main focus at the moment, really has had very, very little work for the last 30 years. There are some shallow workings there to a depth of about 1.5 metres to 2 metres, but it's never been followed up since the mid to late 1980s. And what we've identified there is soil anomalies that extend for over 2.8 kilometres of strike length, a northern trend of 1,400 metres and a southern trend of 1,400 metres. All of the workings and all of the drilling that's been done to date is in that small circle where the southern workings dot is there. That is not, and that is all of the drilling that's ever been done in this area. So we've got 1.4 kilometre of high priority target to follow up and drill in that area. And to give you an idea of what that means, the drilling that has been done is only along approximately 140 odd metres, and some very, very substantial gold intersections in that area, but it's never been chased along strike or at depth. So we've got drilling 9 metres at 4.7 grams, 5 at just under 4.8, 9 at 2.6, 5 at 3.6. Some very, very significant drilling in the southern area, southern prospect, but it's never been followed up and never been chased. So we're doing that, and we'll be doing that drilling come Q4 of this year. Moving briefly to the Ashburton Gold Project. It's in the Ashburton and between the Yilgarn Craton and the Pilbara Craton. Very large tenement package there. And really what we're looking for here is large regional structures running through a large tenement package. And you can see the overall geology map here, an aeromagnetic map. But what you can see is a number of structures, and these structures really are key. They run straight through our project. So if you can see them running straight through our project and horse-tailing, for want of a better term, in the northern tenement area. And that's really where it's highly prospective for gold. And these large regional structures are key for mineralisation, gold mineralisation in the craton margin styles of deposits. It's a really interesting target area, and we'll be following that up with some auger drilling this quarter, as well as potentially some RC drilling early next quarter. Moving now on to the Kimberley project, the last project we have. It's a very, very large tenement package here. The copper, we've really broken them up into 3 subsets. So the Speewah area to the north, Copper Flats, which runs from Halls Creek to the Northern Territory tenement, Northern Territory border, and then the Ruby Plains, which runs more north-south. Now, I'll concentrate in this presentation on the Copper Flats area because that's really the one target area that we're aggressively exploring and try to push that area forward. It's a very large package. It extends for about 100 kilometres of strike length north-south, north-east to south-west. Has had some very significant geochemical samples and trench sampling, but has never been followed up with the appropriate level of drilling that really the prospects deserve. Zooming in on Copper Flats itself, we've identified from reprocessing of aeromagnetic and radiometric data a target horizon that is clearly traceable. It's called the Headley Limestone. It's clearly traceable for over 100 kilometres northeast to southwest. And you can see that there in the blue on the radiometric map on the right-hand side. 3 targets and 3 prospects have been identified to date. Area 5 and Area 4 are really, I believe, the highest priority target areas. And we've got 9 metres of trench sampling running up to 7.8% copper and very significant silver grades. And at Area 4, 15 metres at 8% and 18 grams silver, up to 6.4% and 120 grams silver at Area 4, and they haven't even been followed up or drilled yet. The Jackhammer prospect has been drilled, and there's been some very substantial copper mineralisation there as well. So really, we want to get in there and drill Area 4 and 5 as a priority, but also identify and test this very, very substantial package that extends for over 100 kilometres and test that area as quickly as we can. We're going through the permitting and grant process for those tenements, and we're hoping that they'll be granted in December of this year. Really, and exploration, what are we doing on all of the areas? And then from there, what's the expected news flow? So in the Darling Range project, we're working through land access agreements with the landholders. There are 3 main landholders at Black Hills that we're negotiating with. One we've already reached in principle agreement with, and the other 2 we're just working through the finer details, and we expect those will be signed in the coming month, probably in the next month or so. That will lead to ground EM surveys in the current quarter, leading to drilling of those EM targets in quarter 4. In the Great Southern at Calliup Creek, we had that soil sampling that we released in the June quarter, and we'll follow that up. It's a bit wet down there now in winter rains, tends to make it a bit hard to work down there in the middle of winter. So we'll be drilling that probably very late this quarter or in Q4. The Ashburton, as I mentioned, we'll be doing some auger sampling there this quarter. And in the Kimberley project, reprocessing of the aeromagnetic data, more reprocessing, surface sampling this quarter, and then tenement grants and moving forward with that project in the December quarter. So that wraps up really where we are, where we believe our projects are, and our news flow going forward. So it's an exciting time for us. We've got a really good team to now help progress the assets, and look forward to the upcoming drilling campaigns over all of our projects. So thanks very much for your time.
And look, Tolga, so what's your take on the current inflation concerns?
It hasn't really been watching the Fed and listening to all these guys talk, and to be honest, I'm like, I don't know what it's like from just inflation for us. And I own a cattle farm, and the cattle prices are like doubled in the last 12, 18 months. It's not like it's gone a little bit. So if you're telling me there's no inflation and it's not sustainable, you're not paying attention to what's happening in the real world. Property prices, building, construction, steel, like this moment where with one of our other companies, we're contracted for another drill rig in Canada. And it was meant to arrive, our third rig was meant to arrive in mid-June. And they literally called us about 2 weeks out saying, we just can't get the steel. Like, there's just no, we can't get it. I'm like, oh, we'll just pay whatever. And they're like, no, we can't get it. So you're seeing this huge demand from everywhere. So people are just paying above and beyond. Look, there's probably a pullback at some point, but with, US inflation last month was 5%, it's negative yields basically. So you kind of want to own infrastructure, own hard assets. So it's I don't think it's going away anytime soon.
Well, just on that then, so what would you recommend is a good way to protect from major loss during periods of inflation?
This is a scary one as well. Holding hard assets has probably protected you from inflation. However, the cost of capital being where it is, for someone to buy a house, $1 million mortgage is 20 grand is in terms of its interest cost. So it's not exactly a lot of money. But if, and this is where it gets tough, if interest rates eventually do stabilise at a more normalised level and 2, 3, 4, 5%, people that have gone and taken out big mortgages are going to have issues. And the reverberations through the markets is going to be, I'd say, significant. So I'm not telling anyone to go and buy a house right now because I just don't know when interest rates are going to move. But but when they do, it's going to have some kind of stress on the markets.
Absolutely. And look, now with COVID creeping back into some parts of Australia, do you think that investors should be concerned, or do you see some strong returns still being generated from the market in the near future?
Yeah, I'm worried about returns. I'm worried about people's health, more so than how do you make money out of it. I was just reading an an email I got from a lady who works as a contact tracer in the US this morning, and she's like literally saying this is so virulent, it's actually causing so much pain. It's not like the first version that if you've had COVID before, you got a bit of a sniffle, you got over it, or you didn't even know you had it. He goes, this time you know you've got it. So not so much the markets, I'm just worried about actual people. And yeah, I'm it's going to be a difficult one to see, because the first time around, Australia kind of insulated, we've been lucky. We're an island. We can kind of reduce the impact by doing our lockdowns and quarantines and all that sort of stuff. But at some point, that's going to change, because people are just going to be upset and tired of sitting inside a house. You can't do it forever. So kind of if vaccinations work and all those questions. But from a market perspective, it's the first time around, everyone was stuck at home just trading. Nothing else to do. So everyone that had access to a computer and had some savings, and especially the first time around, the government gave you $20,000 out of your super, so all of a sudden you've taken that out and gone punting. Most people have gone punting as professional investors, but buying stocks and selling stocks every day. But this time around, the handouts haven't been there. The super funds aren't there. So I don't know how it's going to play out for the junior end of the market where we are. But I mean, the big tech companies, that thematic just continues. Like the Amazons of the world, people aren't going to retail. We're not flying anywhere, and it's probably not going to happen for quite some time. So it's a tough one.
Well, look, enough about COVID. Let's get back to investing. So, look, I know you mostly invest in the resource sector with an emphasis on exploration stocks. However, what other sectors do you see strong growth for? I know you just mentioned, the tech side of things, but is there anything else?
I predominantly only invest in resources unless there's like a emotional angle for me. So if there's something I've experienced, or some of my family or someone I've loved has experienced, then I'll give you an example. Like there's a little biotech company called Rhythm Biosciences, RHI. And I invested in that purely because I was presented to me. My dad was going through a process right now where he's getting his colon checked and to see if he had dramas and issues and cancer and lots of stuff. And one of my mates, actually, another close friend of mine, did have it. Did a colonoscopy and going through a process. So some things that actually touch me and where I can see a difference. But yeah, tech companies, I'm investing in that. Family's owned, which is cybersecurity. It's trolling, bullies, cyber bullies, pedophiles, pornography for kids. So the teachers and children and parents can see what's going on in their lives. So things that actually make a difference that I'm passionate about. But in terms of, the greater market, it's not really my space. But clearly, I know for myself and my partner, shopping on Amazon rather than going into stores is like a massive thing that's not going away. And you look at the Afterpay, the takeover recently, I mean, again, people are shopping online, using Amazon and then using Afterpay to do it, and all sorts of those buy now, pay later functions. So I suppose there's growth in that still. You can see if they're paying $39 billion for it. So someone thinks there's more growth in it as well. So, yeah, it's not really my space, but things are like.
Well, just on that, so I think you obviously talked about things that you like and things that are sort of hit close to home. We all know that you invest based on a strong management team, but is there any other criteria that you look for as well before investing in a company?
Yeah, so I suppose a strong management team. Sometimes a management team isn't that strong, like in perceived strength. Like sometimes they failed, things have gone wrong, and it's been out of their hands, but people would consider it a weak management team. It's not what I look for. I more look for resilience in a management team than anything else, because I'll be perfectly blunt, most of these projects as explorers, they're not that going to get lucky. They're just not going to get lucky. Not all of them are going to work. It just doesn't work that way. It's only random when a Bellevue comes along and turns into a multi-million ounce deposit that's going to spit out serious cash flow, and it's basically life changing. But one thing that I do look for, one of my criteria, is if the management team actually finds what they're telling you they're going to find, what they're looking for, is there a possibility they're going to take it out? Is a major going to buy them? And two ways you make money in junior markets. It's either you buy and you trade the stock, and usually in my position I can't really trade the stock unless a lot of volume to be able to buy and sell. But majority of the time that doesn't happen in the things I'm invested in. Or someone else takes them out at some point. Or they take them to a Bellevue where it's a $1 billion company, and it doesn't really matter if Tolga sells or buys anymore. It's controlled by institutions more so than anything else. So really one of the major points is it going to be a project that a BHP or a Rio or a Vale or I don't know, Independence Group or whatever, one of the bigger companies will go and say, that's actually really nice, that's interesting, here's a check, we'll take it off your hands and we'll go develop it.
Well, just on that trading as well, so can you tell us a little bit more about your trading strategy and has it evolved over time?
Yeah. It's evolved over time, probably because I've just evolved over time in terms of my maturity and capability to hold a position. And so it's everyone has a different strategy and a different program, but I'm not really a trader. Like I said, the only time I really sell a stock is if something's happened with management or I've found something significantly better in that space to invest in. But majority of the time, like I said, I'm looking for Bellevues. So I am invested in the company, and things go right, things go wrong. Usually I stay there, unless I've been lied to or I've been disappointed by something that's happened more with management. So yeah, no, I'm usually there for the longer term.
And look, last one, just to close it off. So we all know that you've been engaging in some new ventures. Can you tell us a little bit about them?
New ventures, I've been funding old ventures actually. There's a couple of interesting things. I mean, it's literally I spend my entire life waiting for assays, waiting for drilling results. And I've been doing this for the last 10, 15, 20 years, probably almost. I'm executive chairman of Aston Minerals, and that's in Ontario in Canada. And we've been drilling away there. And again, it's been taking forever the drill results to come through, but we've been hitting visible gold in numerous holes, so we know we're onto something. The other day we came out with some numbers. It was like 35 meters of core that was sprinkled with visible gold through it, which we announced to market. And then 600-700 meters away, we hit visible gold again in really nice little slugs as well. So we're excited. I'm excited about that. It's just a matter of time. We're also just south of a company called Naront, which BHP and Twiggy are bidding for at the moment. They have a bit of a battle. So that's a nickel cobalt play, and we're about to drill some nickel cobalt targets there as well as soon as the permits come through, which could be exciting. What else? I put more money into Alto, and Alto Resources. I reckon I don't even know what to tell you. I don't want to think about how much money I've actually invested in this thing, chasing copper porphyries. And we spoke about this earlier today, but yeah, there's another target they've got south of Bingham Canyon, which is Rio Tinto's big asset. It looks really exciting. Management really excited. So it's just a matter of time, and they drill that in September. So that could be really interesting. What else? There's Meteoric, which has been drilling in Brazil and in WA. They announced visible gold in a couple of their holes in the Palm Springs project, which is exciting. A big broad zone. So looking forward to the numbers from that. In Brazil, they've turned off assays, and again, me hunting copper porphyries. So fingers crossed again. So it comes from those numbers. What else? The sand, the white sands, the silica sands. We're PEC drilling white sand at the moment. So that could be really exciting if the iron numbers are really low. That goes straight into the PV solar cell market. What else? Got a bunch of things. I mean, I'm literally company after company. There's African Gold, which has been drilling for the last few months. I mean, we just stopped drilling, so we're again waiting for assays, and that's over in West Africa. keep going. Industrial Minerals just listed, but they should have a rig out there in a couple of weeks. Firebird, it's taken a while now, which the market's gone pretty quiet on it, but they should be drilling this week or next for their manganese project. And, just do a comparison between that and E25 and the valuation of what E25 achieves. These guys on the same track. So I'm waiting to see what comes from that. But yeah, that kind of got so many companies that are kind of involved in Raiden, which has got that ground next to Hemi, next to Grey, so abutting to Grey. And they'll be drilling it back into this year. So again, exciting. So there's new deals, old deals. It's literally, I feel like I'm just literally, waiting for assay labs, which has been frustrating, but it is what it is.
Well, I'm sure that's not even a quarter of the portfolio that you've got on all the watch list, even. So
I'm going through a watch list, and if I flick through it, it takes me, there's 45 separate companies that I'm invested in. Most people don't know most of them, but yeah. Then there's all the little shells companies that have been basically taking position, waiting for management to come with projects. So, and that's kind of how I've made a lot of my money, to be honest. Investing and waiting for deals to come forward. And hopefully one of them turns into a Bellevue.
Well, fingers crossed. And thank you for your time again today, Tolga. And as always, good to chat.
No worries. Thanks, Jane. Take care, people.